Good morning and welcome to the Introduce Investor Days in Stockholm. My name is Rickard Anderkrans. I work as a healthcare analyst at ABG Sundal Collier. I'm very happy to present the CEO of OREXO today, NIKOLAJ Sørensen. So the stage is yours.
Thank you very much. So it's great to have a Monday. Last week became unexpectedly dramatic for OREXO, at least from a share price perspective, and I will return to that a little later, in an otherwise quite undramatic week from our perspective. I'm here to talk about OREXO. OREXO, we are a pharmaceutical company, and what we're really good at is what we call drug formulation technology, so reformulation of existing products. That means that how can you optimize the uptake of a pharmaceutical in a different way that it works. And in Sweden, I think some of you would know that you have different brands of Alvedon Novum, for example, which is a faster uptake. And that's kind of what we're pretty good at, is redesigning pharmaceuticals so they work in a better way. First, a very short introduction to the company. So what we have done is, based on our technology, we have brought 4 different products to the market. Today, 3 of them are still generating revenues, and the 4th one have been divested from the company. That set us a little apart from most other Swedish companies, that we actually know what it takes to take a product all the way from idea to the market. The big focus for us today is the opioid addiction market in the US, where we have ZUBSOLV, and I will spend quite a lot of time on ZUBSOLV in a few minutes. But maybe just some highlights on the company. I think another thing that really sets us apart in the Swedish landscape is that we're profitable. We've been profitable since 2016. We have a pretty strong cash position. We have nearly 700 million on the bank account. And we've seen our profitabilities improving year after year for the last 2 years. And I'll come a little more back to the financials. So just a short step back in history. When I joined OREXO, or became the CEO, the big focus for us was the launch of ZUBSOLV for treatment of opioid addiction in the US. We were not profitable and had not been profitable on a full year basis. So with the exception of a few quarters, one of the targets I had was to secure profitability and to ensure that we had what we call a sustainable business model, meaning that our own revenues that we control is enough to create a profitable company which we can then feed into R&D or in other investment areas. We reached that in 2016. So last year we said, okay, now we reached these targets. What are the next steps for the company to take this next step up in the S-curve? And one of the things that are important for us is we do have a subsidiary in the US. We have our own commercial infrastructure, but it's not really fully occupied, you can say. We have much more scale to generate out of that, so leverage the scale of that organization. So we have a target of broadening our commercial platform, both through working with our own pipeline, but also through business development, and that's where the cash position comes good in hand. That said, we're of course not here to jeopardize our profitability, and some of the things we're working on, and we have this turning every stone concept in our production of ZUBSOLV, is how can we improve the performance of our subsidiary in the US, and in particular the profit contribution from ZUBSOLV. And as we're selling nearly 400,000 tablets every week, then you don't need to be a mathematician to understand that a few cents in additional savings on the manufacturing cost will generate quite a lot of money on the bottom line. We are working on a broad pipeline, and we have made some good progress during 2019. So we do anticipate that within the next 4 years, we would have at least 1 new product coming out of that pipeline. It could very easily be more than 1 also. I think right now it could easily be 3 products. So coming into the pipeline, today, as said, we have ZUBSOLV. We also have 2 products, Abstral and Edluar, that are generating royalties. I will flag for those of you who are looking into the company that in particular the Abstral revenues, a lot of the royalties will cease after 2019 as the patents will expire on that product. For Edluar, we will see that in some markets, but in a lot of markets we will still generate some income, and we will still generate income from Abstral also, but not from the main market, which is Europe. ZUBSOLV, however, has a patent life until 2032, so we have pretty long perspective on that. And now you can see we haven't said rest of world, but we do have a partnership in Australia. It is about to get prices in Australia, and then our partner in Australia will launch it. If you look at our pipeline, I'll not spend that much time on that today in favor of time. The most advanced one is what we call OX124. That's a nasal spray for overdose treatment of opioids. What's unique with that compared to the other products that we have in the market today, or it's actually only one nasal spray, is that this is much more powerful. And we've shown that in clinical trials in a head-to-head study against the other product, that we have a much faster uptake, it's a much more potent, and it will last longer in the body. And that's something we really have searched for, because what kills people today is not heroin. Heroin also kills, but what people really die from in the US is fentanyl overdose, and fentanyl is much more potent than heroin, so you need something stronger, and that's what we have here. Nalmefene is targeting the same, it's a different molecule, it's a little more longer acting. We are one step behind with nalmefene, but as we've shown proof of concept in naloxone, the OX124, we believe that this one will work also, so we can probably bring it to market quite fast. Then we have our next product that will generate data, that's ketorolac. Ketorolac is actually a known painkiller since many decades back. It's an NSAID. It's the most potent NSAID. And NSAID is the same as you have in Ipren and Alvedon in Sweden, or ibuprofen, paracetamol and others. But this is much more potent. The issue with this is so potent that people have had issues with stomach ulcers, and today it's only available either through a nasal spray, which is very expensive and it hurts a lot to take it through the nose, or you need to get it injected. What we believe we have done here is to make this a sublingual tablet. And the advantages of that is that you can suddenly broaden the scope of who can take it. So if dentists, for example, can prescribe this product, you can get it if you have a bad knee or something after a football match or something. We are going into phase 1 studies in a few months. So in Q4, we will have our first clinical data on this one. But again, if that works, we actually have an alternative to opioids. The one thing that does differ is that if you can't take it for more than 5 days, or we will probably have the same issues with stomach ulcers as you've seen before. So this is really an emergency treatment rather than a chronic treatment. Then we have a product that one of them is put a little on the side. We're trying to use the same opioids that we're using in Zubsolv. So Zubsolv, being a treatment for opioid dependence, is actually also using an opioid group called buprenorphine. Buprenorphine is, however, a much more, you can say, a nicer opioid than heroin or fentanyl. It's very long acting. You don't get high. It's very difficult to get an overdose. And it's like methadone, which is more known, is also the same. It's also an opioid, but you really don't get influenced by it in the way that you get high, you get drowsy or similar. You can basically live a normal life. However, all of the products that you have today is either a depot formulation or it's a sublingual formulation. What we're trying to do here is to do an oral tablet, so you can swallow it with a glass of water like most other medicines. That is difficult, and we've tried it in humans and animals a couple of times, and we're still working to find the optimal formulation. So that's a little further behind. Then we have a partnership with a product for microvascular disease. It's partnered with a company called Gesynta. It's what you call an NCE, so it's a completely new chemical entity. So that takes much longer time to develop, and I will actually not talk that much about it before we've seen it works in humans. Then our newest venture, we just announced that a few weeks ago, and that's a digital therapy. And now you can say, why do you do digital therapy? That's not a pharmaceutical. However, I see that digital therapy has a lot of the same characteristics as you have with a pharmaceutical. It's been shown multiple studies to have effects which is comparable to pharmaceuticals if they're done the right way. We have seen that the US payers, and even in Europe, most lately Germany, has to have a legislation where you reimburse these digital therapy in the same way that you reimburse any other therapy, so like a specialty pharma product. We've also seen that for it to have an effect, you need to do more than just download it on App Store. You actually need to have a combination of the application and the intervention of a physician or a nurse or similar, or therapist. So you need to work with the pharmaceutical or with the doctors, just like you have to do with a pharmaceutical. And that's why we think we can add value. Coming in with a product that is more, you can say, adapt to the individual patient. And it's something where we can also provide a value proposition for the doctors, so they can actually get feedback continuously on how this performs in the patients, and monitor patient progress and basically adjust the other part of the treatment, which would be a pharmaceutical most likely, or other therapies together with the digital therapy. And if you look at Gaia that we worked with, and we actually looked at this since middle of 2017. So we scanned the market and we found that Gaia probably have the most advanced platform today. They have done clinical trials in more than 10,000 patients. The most advanced is for depression, which has been launched and commercialized in Europe for many years, lately through a company called Servier, a French company. They also have one for alcohol addiction, and they have shown data which is absolutely comparable to pharmaceuticals in terms of patient retention and patient outcome. So patients actually getting better clinical effect using these tools. If we combine that with OREXO, where we have a commercial platform in the US, we do have an interface with all of the physicians. We will have that for many years to come because we have ZUBSOLV. We actually have a unique company. They would claim that they're world leaders, and so far we haven't found anyone who has just remotely close to the same data to show that they can develop digital therapy within the CNS space as they have. And at the same time, we set us apart from many other digital companies that we have an infrastructure in the US that can commercialize this to the physicians. So this is very exciting. At the same time, I will also say that digital therapy is it is in the infancy. We are still working to find the business model that will work. But I'm absolutely certain that in 10 years from now, if you go to the physician with a CNS disorder, there will be a digital element into that treatment. The question is just for us, can we find a business model that works? And how do we get it out in an efficient way? And of course, the barrier of entry for other companies is not that high. But can we show that by being smarter and developing something better, we can actually differentiate, then we believe we have a good product. And that's why we're partnered with Gaia, because they have 120 people working just on digital therapy down in Germany. So coming to the key market, we're looking at the US. This is on everyone's mind, I think also in Sweden. Just last week, I at least had the pleasure of listening to the 2 times I can make it with the news on the radio to Uppsala when I drive from Stockholm. I heard about the Johnson & Johnson damage case, where now the pharmaceutical companies have to pay quite a high damages. I think they were fined $572 million in Oklahoma just. Oklahoma has 3.9 million inhabitants, and if you try to extrapolate that up to 340 million, you get to a pretty big number. This was the most dramatic that happened last week, and I think the only thing that could impact us, which is probably a little of misunderstanding, that's actually that this will get more money to float into treatment of opioid dependence. We are not at all on the side of selling painkillers, we're selling a treatment. And what we see in the US is just this weekend, the New York Times had an editorial asking all of the states to take their responsibility and use the money that they get in damages from the pharmaceutical industry to broaden access to treatment. Who will benefit from broadened access to treatment? Those who supply treatment, that means OREXO and other companies in the same space. And if you look at the space that we are in, we have a market where we have 4 million people today that are suffering, or 2017 suffering from opioid dependence. We had a Capital Markets Day in 18 December where we explained how we came up with these numbers. We're using an external consultant agency to do it. But we're pretty certain that this number will go up with 50% in a few years. And how can we say that when prescription of opioid dependence or opioid painkillers is declining? That's because you see people who grow dependent do that after 5 to 7 years. That means if you're going to look at the growth curve, you need to go 5 to 7 years back in the painkillers. What will happen when you shrink access to opioid painkillers is that more people will be forced to seek treatment. And that's what we also believe is that the people who are actually getting treated is growing even more. And if you look at those who are on buprenorphine treatment, we believe that could be as much as doubling in 2023, which would equal about a 12% per year growth rate in this spectrum. And if we look at where we are right now, we actually had a growth rate the last week, I think we're up at 13%. So we're hovering right now 13 to 14% every week. What is really growing is when we look at the market, we need to look at different segments. It is the Medicaid, which is people with low income, and Medicare, it's people who are retired. That's the one that are really growing with nearly 20%. We have a decent growth in what you call commercial insurance, that's people with a private health insurance. And then we see that the cash market is going down a little. The challenge for ZUBSOLV is that where we really do good work is in the commercial space. We have reimbursed for nearly 100% of the patients, but that is not growing as fast as the market. As you can see here up in the public market, we're actually losing a little right now. And that is, if I go to the next slide here, what has happened is that WellCare, where we have had an exclusive contract in November last year decided to open up for competition. So we're still reimbursed, but at a lower level than generics. So when we were before had 90% market share in well care, we're now down to a double digit, I think 15% market share in well care. So that cost us some market share, and we still see some effect of that as we are seeing patients are still standing, but what you have is the new patients coming in. We don't have the same market share as we had before. What has also happened is that Humana did the same. So Humana also, we went from an exclusive contract to get competition. That happened in April. We're not really seeing any major effect. We do see a decline in Humana, but not in any drama so far, because at Humana we are reimbursed at the same level as the generics. And since July 1st, United Health Group has not changed the formularies. On the formulary, we are still exclusive, but we have understood that they do provide access to generics. So for patients who are asking for generic, they can now get generics through Humana, even though their formulary official says that we're still exclusive. So that has caused a little of a turmoil, and we have a slight downward trend. However, what is important in the sales of Zubsolv is that for particular Wellcare and Humana, we are earning much more money on these contracts than we've ever done before, because we're paying much less rebates. So the net contribution from Wellcare, even though we went from 90 to about 15% market share, is still positive. Net contribution from Humana is very positive. And as you saw, those who follow us in our Q2, we had the best result ever if we're excluding one-time milestones. And that's actually because, not because we sold more, but because that we have more contribution from these contracts. And that will of course continue. Another big drama in our space is that in February, I think it was, the big market leader Suboxone film was exposed to generic competition. And we now see just a few weeks ago or a month ago, the generic film overtook the generic branded market. So what we've seen is really that a dynamic within the 65% of the market that belong to Suboxone film, where the generics have taken quite a lot of that market share. How does that impact us? So, of course, having generic competition, you would normally expect to have a price pressure. But what we need to remember is that the generic tablets, and we also are tablet, but we have a branded and we are patent protected, but there are generic tablets in the market and has been that since 6 months before we entered the market, so that we're competing with generics is not really new. But what we do see here, of course, more generics, but we also know that the generic film will probably never reach the price of generic tablets, because film is much more expensive to manufacture. And that's where we are right now. We see that the film is much higher priced than the generic tablets. So what is, if we're just looking ahead for us, I think what is still the key and where we have an obstacle to grow and protect our market share is that in the public space, we are not reimbursed to the same level as the generics and Suboxone film. So what we really work with right now is how can we broaden the access to treatment, not only for all of the patients, but also for Zubsolv in particular. And if we look at the trend right now in the US, we see more and more of these public plans are actually opening up for reimbursement of all products. Most lately in New Jersey, we saw in the editorial from New York, in New York Times, they talked about New York also. There is a bill that has been voted for in Congress by both Democrats and Republicans to open up market access in New York. If that happens, it will be a market worth $100 million gross, that we'll see before rebates, where we today are not reimbursed at all. So we don't have anything in New York, but if they open up, it will be $100 million worth of market. And that's the trend that we see right now, is that we see opening up for different, or for Zubsolv. And if we can just get a level playing field, we have seen in CVS Caremark, where we were opened up in the beginning of the year, we have seen that in Ohio, when we came into early in the year, that we are gaining market share. If we can just get access at the same terms as the competitor, we can get a higher market share. But right now, we do suffer from having less market share in the fastest growing segment. But I think there are good hopes. And what you would normally see in this market is that the branded leader who's seeing generic competition will lose its market access contracts. And what Suboxone has today is a lot of contracts where they say, we pay you this rebate if you don't reimburse other branded products. Other branded products basically just means Zubsolv. So if we don't reimburse Zubsolv, we will pay, as Indivior, who's marketing Suboxone film, a higher rebate. But as you now have generics, you're likely to see that the Suboxone film over time, their contract will disappear, and we will hopefully have access to come in. And I just have 2 more pictures. So looking at our financials, what we have here is the last 12 months, and what you see in the parentheses is actually the last 12 months a year ago. So we have seen a good growth in group revenues. It's really been driven by SUBSOLV, increased contribution from SUBSOLV. We have, of course, been helped a little by the dollar also. Our EBIT, which is where we spend a lot of time, is to improve profitability. It's gone from 115 to 155. And that's really driven by the US, where we see our US EBIT contribution is going up from a year ago, 132 to 277 million, and more than 100% growth. And what is driving this is 2 things. First of all, top line growth. We are, if you look away from the volumes, we're also having a price increase. We increased the prices with 4% this year. But also our gross margins is improving dramatically due to lower cost of goods. And our cash position, which is important for R&D and for business development, is now 700 million. And we do have a bond, which was on 325 million. We paid off 30 million in August, so it's a little less right now. But we have a very strong cash position. Just back to the profitability, and this is really the curve I'm most proud about, is how we have improved the US profitability. And if we look at the latest quarter, we were more than 40% profitable in the US. Just looking ahead, we are in a space where it's a growing market, no doubt. This market will grow. The big question is how much market share and how can we participate in this market. We now have 2 bets right now. We have SUBSOLV and we have digital therapy, and actually we also have a pipeline. So you can say we have a couple of more bets into this market. We do that from a position where we actually have a very strong cash position. We have profitability. I don't see that to be in any danger in the US. As we're actually not losing sales right now, we're just flat. That means that we're losing a little market share, but I think with new market access contracts, that could turn around. We have a track record. We know what it takes to develop a product. We have a pipeline of 4 products. One of them, OX124, we think if everything goes right, we could file it already in 2021, meaning that we could commercialize it in early 2022. Merchant acquisitions, business development, an area where we are both increasing our resources. We had an American starting to work with that full time for us in the US during the summer, so hopefully we can make a little more noise in that space. And finally, we have our pipeline where we see right now we are first have our own pharmaceutical, but now we also have digital therapy. With that, I will open up for questions and answers. Thank you.
Perfect. Thank you, Nikolaj. A key focus for OREXO going forward is expanding the product pipeline and looking at the product portfolio with new assets. So are you evaluating earlier or more late-stage alternatives, and how do you think about capital allocation in general, given your large cash position at the moment?
I think it's important to say that we have made it to become a profitable specialty pharma company. We're not a research and development company. That means that to go into early stage, we do that, but we don't do that in a way that we jeopardize our cash position. Because at least I was recruited, so that was a strategy for the board. We don't want to be in a situation where we need to raise cash every 6 to 9 months to finance our pipeline. You have to create a situation where you can finance that on your own. That strategy still sticks. That means that some early stage projects is simply too big for us to take on. But we are looking at some early stage projects and see how can we find creative solutions for that. Because it's simply easier to find early stage products and it's a little less upfront. But our focus is really on late stage and commercial assets. And now also digital therapy is an area where I cautiously move forward. So it's important to know that what we're paying Gaia is actually a co-development program. We don't pay any big upfronts to Gaia, but we do pay part of the development, and we manage the clinical development for full.
So what are you looking for when you're evaluating M&A, potential M&A candidates?
I think the dream for me is to find someone who are a little like us, a little subscale in their commercial operations. And by putting the 2 together, you see great synergies in the commercial space, which could both improve our profitability and the profitability of the target that we're looking at. Because that could motivate a quite big premium, because we are in a situation where we could quite easily manage 1 more product without expanding our infrastructure too dramatically. So that's where we have most of the focus. At the same time, I think we need to be a little opportunistic, because there are not that many companies that fit that profile out there. But there are definitely those opportunities. And I like to say that if I'm looking back at my time, 6 years as a CEO, I have passed at least a handful of opportunities which would have been perfect had we not been in a situation where we had been unprofitable and needed more cash, had we not been in a situation where ZUBSOLV patent has been in a litigation with Actavis, meaning that we didn't have certainty about the long-term future of our commercial infrastructure in the US. Now, when we do have that, and we actually just continue to build cash, I just have to believe that some of these opportunities will occur again.
Okay. Could you give us a quick walkthrough of how a digital therapist, how it's working, or like a case study, so to say?
So there are two types, and most of them today are actually, I would say, more patient adherence. So it follow how the patient take their medication, and does the medication do the job so you get better, or if it's, you can say, follow if you're losing weight or something. But what's set the Gaia part of Gaia one apart is it actually should replace your therapist in a way that's not only a one-way education, but it adapt the questions and also some of the educational aspects of the treatment to the answers you gave before. So if the two of us had gone in and started the same treatment, we would, within a few weeks, we would have a very different, it will interface different communication or questions with that tool, because it will adapt based on what you have answered last time. And that really differs from the one that is in the market right now. It's a product called Reset-O. You just go through a module of education, and then you pass some, you can really say, type of exam. You need to answer a few questions. And if you answer the right questions, you will go to the next step. If not, you will go back. But here you will actually see it adapt all the time. And that's a little how the treatment is, that sometimes you're feeling good, and then something happened that you actually have to turn the tape back, and you need to start over again. It's a little difficult for me to imagine, but at least the feedback we've seen from Gaia's other products is that people actually feel it replaces the therapist. It asks the same type of questions with the same sophistication. And evidently it works, because the data they have on Deprexis, which is for depression, and for the alcohol product Movida is very impressive. So it will basically, you will start entering all the data about your disease, and then you will get questions. How do you feel today? What have you get if it's opioid? Have you had cravings? Have you felt a desire to go back to opioid? And say yes, then go back. Or you know that you've done such a good work the last week, so why have you done that? And it's kind of, it becomes an interaction. But I do hope that when we get a little further along, we can show it live together with the Gaia could come and present it for investors here in Stockholm.
Excellent. Thank you very much, and thank you all for listening. That will be all for us.
Thank you.
Okay, let's start off with this presentation as well. My name is Simon Granat. I'm an equity analyst at ABG Sundal Collier. And today with us we have Anna Engholm, who is the CEO of Motion Display, who was here last year in May. And with that said, I'll welcome you to start your presentation.
Thank you very much, Simon. I am Anna Engholm, CEO of Motion Display, and we have developed a revolutionary product for in-store marketing. And I would like to start by showing a short movie.
The environment has become extremely cluttered, and shoppers only notice 0.2% of the store's assortment. What if you could guarantee that a product is being noticed? What if you could redirect the shopper's eyes and get them to notice your product? Now you can! Motion Display has developed a revolutionary product that cuts through the noise and captures the shopper's attention in the busy store environment, right at the product where more than 70% of the purchasing decisions are made. The solution is simple, engaging, and cost-effective. Retail Academics Research Institute in Stockholm has conducted some of the world's largest in-store studies involving eye tracking. One conclusion from these studies is that shoppers usually only notice 0.2% of a store's assortment, missing 99.8%. In these eye-tracking studies, the shoppers wear glasses that register exactly what they observe. The result is illustrated with heat maps, and here's an example. In this gondola, there is a coupon offer, and the heat map shows that the shoppers do not see it. But see what happens when we add Motion Display. The result is obvious. The offer is being noticed. Built-in instinct forces us to react to unexpected movement. The same study shows that the time it took to notice the product was reduced from an average of 12.6 seconds to 1.6 seconds. That's 8 times faster. This study shows Motion Display technology significantly increases the shopper's awareness and reduces the time to notice the product. So how does it work? A display consists of a black and white e-paper display with a transparent color print on top. Customized messages are pre-programmed and switch from black to white, thus creating a flashing animation sequence. The display is energy efficient, running continuously on small batteries for several months and even up to a whole year. It can be easily mounted anywhere in the store with tamper-resistant hardware.
In study after study, we can see that Motion Display captures the shopper's interest. The subtle blink creates contrast towards a static background without being intrusive.
Capture your shopper's attention. Contact Motion Display today.
Did you know that manufacturers like Coca-Cola, Procter & Gamble, etc. spend $225 billion on marketing annually in US alone? And did you know that only 3% is spent on in-store advertising, despite the fact that more than 70% of the purchasing decisions are made in store in front of the product. And the reason is there's simply a lack of attractive opportunities for effective advertising in store. As we saw in the movie, shoppers usually only notice 0.2% of the store's assortment, missing 99.8%. So the challenge for the manufacturers is to create the impact for the shopper's decision, how to impact the shopper's decision. So what do they need to do? Well, they need to make sure the product is being seen. Because if the product is never being seen, it will never be purchased. They also need to connect to other marketing activities, like when there is a new product launch, there are TV commercials, there are magazine advertising, there are digital marketing in social media, etc. And they need to not forget the final reminder at the shelf in the store. They also need to attract new shoppers, to highlight why should the shoppers select their product instead of the product they normally always take in the store. And they want to engage the shoppers to find out more, to get curious about the product. And not least, they need to boost their brand image and increase the number of impressions. And we have a solution to this. We have created a revolutionary product for in-store marketing, and this is animated e-paper displays. They run on small batteries for up to 1 year when animating continuously 24/7. We can customize them in different sizes and shapes and colors. We have proven dramatic sales increase, as you saw in the movie, when using our displays. And we certainly created tension. We are triggering the reptile instinct. And you know, when there's something happening in the grass, you simply need to react. There might be a dangerous snake. And the displays are running on small coin cell batteries, easy to replace if you like. And the displays are as easy to deploy as traditional printed signage material. We position ourselves as being between static print and in-store TV, where we have an even more efficient, effective ways to promote the products in front of the product, where the purchasing decisions are made. The company was founded by Mr. ERIK Danielsson, who also founded Pricer. Pricer is world leader in electronic shelf labels with now more than 200 million ESL tags installed worldwide. And his vision was to create not only a company with the features of price integrity, showing the correct price on the shelf, but also to engage the manufacturers to also spend money on marketing on the shelf, and adding this marketing possibility to create an in-store media channel in-store. And we develop, we manufacture, and we market these unique animated e-paper displays. And since 2014, we are listed on the Spotlight stock market. The product we have developed is unique. I mentioned the 12-month, 1-year battery life length. We also have the possibility to put the display into sleep, to even extend it to 2 years or more if needed. We have a built-in calendar and clock. In fact, these displays are more intelligent than my first computer. The display we see here is the price display, and you can easily just change the figures by pushing on buttons on the back. And if you like, we also have support for NFC, which is near-field communication, a short-range wireless communication. So if you have an app, you could change the price in the phone and just touch the display to change the display. And as I mentioned, we make customized displays in various sizes. This is just recently a display we have delivered now. So they can be in various sizes, like this one is a very big one, or the one you saw in the movie is also quite big. Things tend to be bigger in the United States like this. And we are located in Uppsala, where we have our head office. We are now 17 people. We have engineering, we have design, we have sales support, product management. And out of these 17 people, there are only 2 salespeople. And we recently engaged a new senior salesperson just a couple of weeks ago. We do our production in Shenzhen in China, where we have our own manufacturing facility plant. And we have, since 2014, we have a sales office in the United States in Bentonville, Arkansas. And we are now 4 salespeople there. We have, in practice, doubled the sales force since the beginning of the year. Bentonville is the city where Walmart has its head office. And for natural reasons, most of our display programs have been deployed in Walmart stores. More than 90% of the sales is in the United States. And I want to give you some idea about the market potential. As I mentioned, most of the display have been installed in Walmart supercenters. There are 3,568 only. Each of these stores have around 140,000 articles. But looking at other categories of retailers, we have pharmacies, 67,000 pharmacies. We just recently, this first half year, delivered a display product that was installed in 2,500 pharmacies. But looking at the convenience stores, there are 154,000. In total, there are more than 2 million stores in the US only, and we are only 4 salespeople. So there's a huge potential, obviously, and we have only scratched the surface. Looking at the different market segments, for various reasons, we have started with the brand, with the manufacturers, but we see that retailers represent an even bigger opportunity. In the end, it will be the retailers who decide what the manufacturers are allowed to place in the stores. But then we do have so many other possibilities, other applications for this display technology. We can build in the display into various products like the cap you see here, etc. So we have just started with the brands. Our customers are some of the world companies behind some of the world's most well-known brands. We have deployed more than 500 programs in more than 20 countries so far. This is one example we are happy that we can share. A sales increase that was measured of 66% for this Clorox display Hidden Valley Ranch dressings. This client also saw a higher level of incremental purchase. The customers also wanted to try other flavors, not only the one they were used to buy. And also, since this display was up and running on the shelf for close to 1 year, they measured a strong repeat business. The shoppers were seeing this display during several buying cycles. And this is just one example. We are having numbers of similar and even higher sales increase that our customers are measuring. So they are coming back. I mentioned that we are customizing the displays in different sizes and shapes, etc. We are also looking at how do the customers want to fix the displays to the shelf. You can see we have made the Gatorade blade, which is like a flag sticking out, or we can mount the display with suction cups on glass doors. So we are looking at where do the customer want to install, and then we can customize. Here's some more example. I have shown the Lego bear. This is where you can see how we're playing with the eyes and the mouth to make it talk like this, or even bigger displays installed in a washing machine. Or now recently we have just delivered a display that is installed in bars in UK. You can see that it really stands out, the Asahi brand here. So we are customizing the displays in various sizes and shapes. And I also want to show you some figures, of course. We had, as you can see, a very good year, 2018, where we reached 50 million Swedish krona in annual turnover, with a healthy profit of more than 8 million Swedish krona. Looking at the first half year, we have had a hesitant start. And we have mentioned basically 2 reasons for this in our reports. By the end of last year, we are using an installation company that is helping us to install the displays in store. We had some problems with them, which severely affected the sales in the first quarter. And we also, the second reason is our sales people. Even if we have doubled the sales force, it has taken a lot of resources and time from the original salespeople, and we have addressed these 2 issues now. And we are now the sales team is now fully up and running. And if you saw our report, we're happy to also show that we have had the highest order intake in the second quarter ever, a little bit more than 10 million Swedish kronor. So we feel that we are now on the move again. So in summary, we are prepared for exciting times ahead. We have a strong prospect list with the interest is continued among new and old customers. The sales force is double in the United States, and we certainly hope that will show some good effects, and they are now fully up and running. We have also strengthened the Swedish organization, as I mentioned, with one more senior salesperson, just started 2 weeks ago. And we have started a cooperation with a German lead generating company. They started in the early summer, and they're currently generating around a handful meeting with potential customer for us now. So we have decided to extend this cooperation with this company. And we have secured access to critical components with long lead times, and we now have a stock amounting to 11 million Swedish krona. And in summary, we remain very optimistic about our company, about our product, and there is obviously an unlimited growth potential with this kind of technology.
Thank you, Anna. Starting off, could you please elaborate a little bit on the different markets that you're operating on? How do they differ in terms of penetration rates, competition? What's the purchasing processes? Perhaps a little bit about that.
First of all, since we have had such a success with the US market, we have really focused on the US market. And we feel that the market is very mature. They are measuring the sales results of various different products in store. And our competition is mainly traditional signage. Printed material, different plastic frames, or it can even be small TV screens as you have seen in stores. But what it all boils down to is that our solution is so much more cost efficient. Looking at a small TV screen, then you will have to have power to install in the shelf, and that's very expensive, etc. So we feel very strong in our market. And then the European market we have been not really focusing on the European market. So now with the German cooperation with this company, we hope that we will also get the European market to start up.
Perfect. And also perhaps a smaller discussion on the current cost base. Do you feel like you need to make any extensive investments either in personnel? You mentioned that you've doubled up the sales force, or perhaps you need to make any extensive investments in products. How should we think about the cost base going forward?
Not at the moment. And when it comes to development, because that is something that can really be expensive, we are developing our products now when having a customer need. So we have a solid base of the product itself, and we are making small changes when there's a customer need and a real project. So I would say not at the moment, not any planned extra cost for new personnel, if that was your question.
Yes, exactly. And today you have a strong gross margin around 50%.
Yes.
Are there any trends or anything that speaks against the sustainability of this level in the longer term, or what's your thinking about it?
I agree. We have a good margin, 48%. It has been around this value for quite a long time. We are selling most of the products through directly to clients. If we would cooperate with a partner, an agent, a reseller, we can definitely expect a lower margin. And then we also always have this trade war that is over us, and we will, as it looks now, will be affected starting today. That's a fact, but it's going to be 10% extra customs duty into the United States that we cannot avoid any longer.
Okay, and does that relate to all your operation also in the European market, that you will be affected from the tariffs? Or
No, only the United States.
Okay, perfect. And in Q2, you had a record high order intake. Are there any larger orders or larger customers that have driven the quarter, or is it coming from a broad set of customers?
We see that the displays are larger, like this one, which is obviously then a bigger business and then a smaller. So, which is great, because we see the clients are, if there is space on the shelf, and this one is also a bigger one than the very small we see in Europe. So we do have some larger projects that we are delivering and taking orders on.
Perfect. That was all of my questions. So thank you, Anna.
Thank you so much.
Okay, welcome to today's presentation and the Introduce Investor Days. My name is Carl Bokvist. I'm the responsible analyst from ABG covering Nordic waterproofing. And with us today we have CEO Martin Ellis. And with that, I leave it over to you for about a 20-minute presentation followed by some questions from my end.
Okay, thank you so much. Good morning. Thank you for coming. Thanks for your interest. We're happy to have you. And I'm going to present a case where we have both top line and bottom line growth. We have stable markets, relatively few small volatility in our end demand. We have a 5% dividend yield right now at the current share price. And we have a significant exposure to green economy, to sustainability in building materials. So that's the case I'm going to present to you. Our core business is waterproofing. We produce waterproofing material and we also install it in some of our countries. So what is critical is to make the use of our material easy. Why is that? Because labor on job sites is expensive and we need to make sure that these people can work as efficiently as possible to make our customers profitable. And we have a complete range of not only waterproofing material, but also, as I mentioned, environmentally friendly solutions, where we produce wood-based prefabricated element, which basically absorb CO2 compared to a traditional concrete solution. And we also have green infrastructure, where we install green surfaces on buildings and other infrastructure. So this is a short summary of where our products appear on a building. The core demand for us is in flat roofs, big boxes basically for logistics centers, factories, office buildings, social housing, etc. But we also have products for the pitched roof housing sector. This is much smaller for us, and it explains why we haven't been so much exposed to the downturn in housing in Sweden, beside the fact that Sweden is obviously only a part of our total business. We're going to see that. This gives you the idea of where we are located geographically. So very much centered on Scandinavia, but for some of our product lines, we have products which travel to some extent, and where we are locally present in Benelux, UK, and Poland and Germany to some extent to use our material, our waterproofing rolls basically, and make prefabricated solutions for our customers. Where, for example, in roofing, you can measure out the roof entirely and then prefabricate that waterproofing for this roof in a plant under a controlled environment, better quality, more efficiency, and then just ship it to the roof and install it very quickly. Again, trying to make installation as easy as possible for our customers. In terms of the split of our businesses, we have 73% of what we're doing is industry, fabrication, manufacturing, and the rest is what we call installation services, which is basically contracting. Most of it is roofing contracting, where we ourselves install the products on the roof. In terms of the cyclicality, an important aspect of our portfolio is that 60% of what we do goes into renovation work, and there the cyclicality is quite weak. People basically renovate the building when they have to renovate it. And 40% only goes to new build, where you can obviously have stronger cycles. We have basically two sales channels. I would say the preferred sales channel is directly to the customer, who is, in our case, the roofing contractor, when we don't do that ourselves. We have a large group of customers who are roofers also. And what we do there is we're dealing with small to medium-sized companies who can use some support from us. Not only the product, which obviously has to be top quality and top logistics, top service levels, very fast delivery, but also we can help them with legal aspects of their business, financial aspects, marketing aspects in some cases. We're talking about companies who employ 5 to 50 people, for example, quite small structures. So we create a very strong link with these people, and therefore the relationship is extremely sticky. It really, we need to really not perform for these people to decide to change their supplier of materials. So that is the biggest part of our sales channels, but we also sell to distribution, which is builders merchants, Excelbüger and the like. The situation there is slightly different. There's more price sensitivity. We provide less services to these people, so we have a lower cost for our internal efforts, but we also get usually lower gross margins. But bottom line, the two segments are quite comparable in profitability. In our core business, waterproofing, we have strong market positions in the countries where we are present, especially Sweden, Finland, and Denmark. To a lesser extent, Norway, where we haven't been as long as in the other countries. But usually we are dealing with 2 to 4 competitors, local competitors, maximum, and market shares are quite stable. We usually have about 1/3 of the niche we are serving. So quite solid positions, and we have to a good extent we have pricing power with our customers because of the service aspect that I mentioned before. We have been listed on the stock exchange in 2016, and since that time we've started a quite aggressive acquisition strategy, and we managed to make 8 significant acquisitions in that time span from 2017 to now. And most of those are diversifications of our base business. So I'm not going to go through each of these, but they are all located either in Scandinavia or in the Benelux. And I would say the predominant majority, the vast majority, have been as successful or more successful compared to what we expected at the time of acquisitions. So a few examples is EPDM Systems, for example, is a Dutch company which we source our material to, synthetic rubber material for waterproofing, and they then prefabricate it like I described just a minute ago. And so they are in touch with the end customer, and it's a very successful concept. One aspect I would like to mention too is when we make acquisitions, usually we buy only companies we know. We need to have good management, outstanding management if possible. That's really important. And usually we give them incentives. Either they keep shares or they have an incentive program with this link to financial performance. And that system works really well. And in the case of EPDM Systems, for example, the CEO has 1/3 of the shares, which is sort of the maximum we usually see. But it's an excellent system. SPD Painting and Ella-Kattohuolto are diversifications in Finland, where we offer not only waterproofing solutions with bitumen-based material, but also liquid waterproofing. It's not very far from our core business, of course, but it's a diversification. And in the case of SPD Paintings, for example, we also create floors for cruise ships, big cruise ships, which are fabricated in Turku, where we have a very strong position. Ella-Kattohuolto is more geared towards roof maintenance, which is something we used to do a bit, but they are really specialists, and they maintain also individual houses very successfully. This line here, Torsing Element and RVT, is prefabricated roof and facade elements. And you can see examples here, for example, where you would build elements which are up to 20 meters wide, 1 story high, all based on wood today, and which allow an extremely fast building cycle. So you can, for example, this floor, you could build significantly in less than 1 week. A very, very fast installation time. Vectec is the company which deals with green surfaces, where we grow sedum in Sweden. and Norway, and where these are then molded into rolls, which are sent to the building site and installed again quite quickly. Distribond is our last acquisition in Belgium, and these people use a bit of our synthetic rubber material again to create small to medium-sized ponds. In Belgium and in Benelux in general, there's a fashion for people to have a small pond in their garden with fish maybe in it, or swimming ponds where you don't need chlorine, you have something which looks like a pond, but you can actually use it for bathing, swimming. And this company we bought recently is very successful, and we now plan to extend the concept to other countries. That is one other aspect of our acquisition strategy. We try to acquire a successful concept, usually local company, and then we try to expand it to basically all of Scandinavia, all of Northern Western Europe, where we have good HR capabilities. So we're already present in these countries. We have good people working for us, and we try to leverage that by expanding these concepts in their country. I mentioned growth. You can see we've grown significantly. A lot of that obviously is acquisitions, but we've also grown organically, and that's really important for us to maintain. And you can see that EBITDA also has grown during that period. In terms of strategy, we have made these acquisitions. Now we are focusing this year especially on profitability and organic growth, and within organic growth, again, expanding the platforms we newly acquired. So especially prefabricated elements and the green infrastructure. When we look at an acquisition target, we want to enhance our product and service offering, basically selling more different categories to our existing customers where this is possible. Second, quite important, we want to benefit from mega trends. One mega trend is usage of wood in construction, which is growing quite significantly, not only in Scandinavia, but also in some European countries on the continent. Another mega trend we see is the green infrastructure aspect, is provide products which allow customers to comply either with regulations. In some countries you have regulations as to the number of square meters that need to be green, or to pursue their own architectural wishes, which also trend towards sustainability and green surfaces. When possible, we also like to forward integrate. I mentioned the example in Holland, EPDM Systems, where we supplied initially just the rolls, the waterproofing material, but where we went one step down the line to be in direct contact with the end customer. Obviously, it gives us much better market intelligence. It allows us to perfect our product specifications to be 100% in line with demand. Number of advantages. Promoting sustainability has been a more recent strategic avenue for us, maybe last 2 years when we first started to move into these wood-based prefabricated elements. And it's going to be one criterion we'll look at when we look at additional targets in our acquisition moves. Sustainability, as I mentioned, is important. We also think we have a very good general ESG position. Part of that is due that we are from Scandinavia. Basically, you have quite good governance compared to the world average in Scandinavia, of course, so it's no big deal to excel in that arena. We have a code of conduct, whistleblowing, which actually worked once very well, only once, fortunately. So we're quite happy, but it is obviously operational. And we obviously check our suppliers. But again, compared to other industries, it's relatively easy to be good in that aspect. So we really focus on the sustainability in terms of environmental characteristics. So there's a number of examples here, and I would just try to focus on the CO2 balance. That's quite interesting because in our prefabricated element business, we use 16,000 cubic meters of wood rather than concrete, which obviously has a very negative footprint in terms of CO2, and wood has a positive, it absorbs CO2, it stocks CO2. So we, all in all, have a very strongly positive CO2 balance in what we do. In terms of the current status, in terms of our performance, these are figures from Q2. We can't go any further in time, but we see that sales are up 21% again, and 13% is from acquisitions, but we also have 6% organic growth in local currency, and then the weak SEK comes on top of that. We have an increase in operating income, and as I mentioned, we have a currently 5% yield for SEK per share last year. And we see an overall stable demand outlook. There's a lot of talk. I mean, there's some reality in the Swedish housing market, where there's been a downturn already, and there's some talk about Finland maybe weakening next year. So that might well be, and we are prepared to deal with it, but we haven't seen anything internally so far in that respect. We see very strong demand still in Denmark, and Norway is stable also. Our financial targets, for those who don't know us so well yet, we have targets in terms of growth. Organic growth has to be stronger than the general demand, if possible. In terms of profitability, we have an ROCE target. The reason we don't use a return on sales is we have a mixed portfolio of industrial activity, where return on sales is higher, but capital employed also, and contracting activities, where there's very little capital requirements, but also a lower return on sales figure. So we don't want to distort. We don't want to manage our portfolio as a function of these things which are not comparable. So ROCE is our benchmark, 13%. We are slightly below after Q2, but we're confident we'll hit this 13% again very soon. The capital structure, we want to be below 3 times financial debt on EBITDA. And again, we will probably be significantly below that at the end of the year. We have obviously a very cyclical capital requirement because we have a strong season which goes until October, November, and some weak months, which is basically December to February because of the weather. Dividend policy, at least 50% of net income. Our board of directors is, I would say, has a strong background related to building materials. Our management team, basically, they have been around successfully for quite a long time, which is important because of the customer relationship. These people are really in touch with the local customers, and that's critical. Our shareholding is relatively stable, I would say, and some significant share percentages there. Our official outlook is, again, we will do slightly better than last year in terms of our operating results, and that is unchanged since the beginning of this year. So that was my presentation.
Perfect. Thank you very much. So perhaps the first question, you commented a bit on the stable outlook. But if we perhaps take a step back instead, the situation people can relate to perhaps is the financial crisis. Can you give some detail on how your markets developed during that time and how Nordic Waterproofing perhaps developed? I know that Nordic Waterproofing didn't exist at the time. It was a merger, but it would be interesting to know.
Yeah, that's an excellent question because it really demonstrates when you look back to the year 2010, which was probably the worst year in terms of demand, we still made significant money. Obviously less than right now, but we had probably slightly more than half of the EBIT ratio that we have today. So good money, I would say. And it demonstrates how relatively insensitive we are to the cycle, because there was some dramatic swings, especially in Denmark, where there was a housing bubble and then just crashed, almost like in the US. And our performance was positive, clearly, and I think it's sort of a reassuring factor.
So then, let's say the worst year that has ever happened to Nordic waterproofing. What sort of declining growth are we talking about here in terms of?
We can see 10 to 15% decline if things get really ugly. So again, relatively mild.
Yeah. And then perhaps if we go into, let's say you talked a bit about Sweden and you talked about Finland. Then you have a prefab business in Denmark with Tåsinge, and you also have a bit of that in Norway. What are you seeing on the Danish and Norwegian markets?
Yeah, right now we see stability at a quite high level. Not extreme, but a good level historically. And we see stability. You mentioned the prefab business. That's interesting because there we have seen a bit of reluctancy by customers to actually jump into the project. So what happens there is they ask us for, we design, it's bespoke projects, complex projects. We have a very good CAD/CAM capability. So they ask us basically to design a lot of the project, and then they can take some time or not to say, okay, bank, now you have the order, and please deliver. And that delay has increased in Denmark, and it explains part of the sort of difficulties we have right now in the prefab business compared to the normal run of the business. So there have been a number of customers who have delayed projects, and you might interpret that as a sign of a coming slowdown. We're not convinced of that at this point, but it might be a sign.
And then if we look at Nordic waterproofing as of today, how large share of a group is waterproofing products? How much is prefab, and how much is green roofing?
Yeah, I would say it's still about 75 to 80% is waterproofing related, and that's not only roofs. That can be railway, bridges, all sorts of infrastructure. The bulk, obviously, is construction of office and other box type of spaces. That's the ratio.
And then when you say infrastructure, I mean, you have previously talked about residential and non-residential, where non-residential is about 2/3.
Yes.
How much is infrastructure? Is that possible to distinguish?
That's probably not more than 10%. I would say it's probably close to 5%. So it's not a huge part.
And then if we look at, for example, 2016, it was a very good year. Raw materials were very favorable.
Yep.
Since then, we've had a situation with different raw materials, if one could say that. But what is your strategy in terms of compensating for raw materials? What's your view on raw materials going forward? Yeah,
again, very interesting question, because raw materials in our core business, the waterproofing manufacturing, are a huge part of our cost. It's about 80% of our cost. The good news is that we are immune to Chinese competition or local labor cost competition, because labor is a very small part of our cost basis. But the other side of the coin is obviously if oil explodes, then we get an impact, because we basically have three raw materials. One is bitumen, quite related to oil. Second is SBS, is a plastifier, also an oil derivative. And the third one is the textile, which we impregnate with the mix of the two former. So in bitumen, we have had quite successful hedging. You can hedge bitumen at the present time, and we've done so reasonably successfully. But you can have swings. Right now, we don't see any huge uptick in oil, but that can change very quickly. The two other materials are consolidated industries, so our suppliers have pricing power. We can't do much in terms of pressuring them, but the trend has been right now rather slowly downwards. Also, it's a function of the world economy, obviously, and so we don't see any big problem there. If there's a big raw material price hike, we can pass it on to customers, but it takes a while. It takes 6 to 9 months. And when they come down dramatically, we usually are able to hold on to our sales prices, maybe 1 or 2% down, but we get a windfall. And that's exactly what happened in 2016, which you mentioned. We had a windfall because raw material prices were at historic lows, and our prices didn't move much.
And then if we look at the other leg of Nordic waterproofing, I mean, stable organic growth, but the M&A part of the business, what has really driven growth in the recent years. What does the current pipeline look like? Which
Yeah.
areas are you looking into?
Mhm.
Could we expect to see something in the near term, or are you, as you said, focusing on organic
Right.
growth for the rest of 19?
Yeah. Baseline is we're focusing on organic growth and profitability. And the reason for that is that, as you know, multiples are quite high historically right now, and we don't want to overpay. So we'd rather wait a bit to get a good deal. So we're really disciplined in terms of how much we pay. And also, we usually want to know the companies we are buying, and that limits the scope to some extent.
Perfect. I see that our time is approaching 25.
Okay.
Thank you very much.
Thank you very much for being here. Thank you very much. Thank you.
Okay, good morning, welcome. My name is Oskar Wikström and I work as an analyst at ABG. And welcome to Introduce Days. This morning we have the pleasure of welcoming HANZA, a manufacturing company who will talk a bit more about their business and their prospects. I leave the word to you. Thank you.
Good morning, and thank you for coming for this presentation. So I'm ERIK STENFORS. I am the founder and the CEO of this company, HANZA. And I realize that this might be a new company for some of you. We have not been participating here before. And therefore, I would like to start with giving you a quick glimpse of our company group. And it's best done, I think, through showing some of our customers. We are a manufacturing company, but we don't manufacture our own products. We do it on behalf of our customers. And you see a few of them on this slide. We do big things like the conveyors for metals and minerals in the bottom of the screen. It weighs a couple of thousand kilos, 12, 15 meter long. We do mid-size products like the grain analyzer in the middle. And we do small things like the silver compasses up in the right corner. And we said we are not going to focus on a certain segment. For us, it's good to have a diversified customer portfolio. So you see, we have customers in the mining sector. So in addition to BENGTSSON, we have Sandvik and Epiroc. We do have energy customers, ABB, Siemens. We have medtech companies like Getinge and GE. And we have the traditional industrial companies. The one you might have seen, we produce the salad bar for Piccadilly. That is in the supermarket. Also, we do recycling machines, which you might have seen if you are good enough to go back with your cans and your bottles. And we are a quite new company. We started in August 2008, and I think we all know what happened that month. It was the Lehman crash. But we survived, and we've been able to grow steadily. You see the graph to the right that the revenue per year has been growing. Last year, it was even accelerating. We had revenue of 1.8 billion SEK last year. And if we add also the acquisition we just made, we're up to 2.3 billion. So it's been a healthy ride. And why then the growth is accelerating at the end, I will come back to in a few minutes. We did an IPO. First, we went into the small market, First North, and then we were upgraded to the main market this year in March to a small cap. And I have about 2,000 colleagues in 20 production units all over the world, and we have grouped them together to something called clusters. And this is an important concept that I will come back to. We have 5 clusters. You see them on the map. It's Sweden, Finland, Baltics, Central Europe, and China. That's where we are located. Now, why would any of these market leader you saw in the previous slide choose HANZA as the manufacturing partner? And how come we have been able to grow like this over these years when there also been some kind of financial difficulties? Well, the key is obviously in the business model, and we have developed a new way of manufacturing. And I'd like to go in more details about this. This will also show you where we are heading for the future. So I will talk a little bit about this, and then I will leave over to Lars Åkerblom, who is the CFO. And he will address this with some numbers, and you will also understand how about the latest acquisition, how that affected us. But let's start then with our business model. And to understand our way of manufacturing, we have to look at the traditional way. This is an example. Somewhere there is a product company. That is the company who has invented, developed, or are selling some product. Now it's getting more and more rare that these product companies actually have their own manufacturing. Instead, they use outside partners. So they use these traditional contract manufacturers. In this specific example, there is some final assembly, but they have outsourced the rest. They have one company in Sweden who is doing some machine parts, one in England for historical reasons, doing the electronics. And Poland, they do some modules, and they also do some cable harnesses in China. Now, this is a very simple supply chain. I can show much more difficult supply chains. This is the basic one. Still, it contains a lot of challenges for the poor CEO who might look like this. First, you have the internal problem. how much does actually this product cost? You might know what the electronic cost or the cable harness, but if you include everything, so you have the cost of supervision, you have the cost of the shipments back and forth. I happen to know that one of the challenges that they have in the factory in Sweden is that the cable sometimes is too short. So they have to send back this module to Poland, and then Poland has to do a claim report to China. And all this cost, of course, the customer must carry. Which is also the disadvantage number 2. We all talk about the Greta effect. And we have invented a new word in Swedish, flygskam, whatever that is, ashamed of flying maybe. Maybe we should be that, but how about these parts and the components? They are traveling several kilometers before it ends up to a product. So not good for the environment. Flexibility, what happens if you want to have double amount of units, you want to increase, you have a breakthrough somewhere, then you have to call all your suppliers and ask them to double the capacity. Not that easy. And now we are talking about the internal challenges. Then we have the external challenges. And these are the trends. We know now there is a war going on between China and US. What happens if that escalates? If there are trade barriers from China, you might need to relocate the cable harnesses. If Boris Johnson if he makes this no-deal Brexit 1st of November, not only will you have to pay more to use England, but also you will add administration. And also, the world is global. So there is an ever ongoing fight for lowering the cost. Now, if you cannot even measure how much it really costs, how can you trim it? So a lot of challenges in this supply chain. And that's why we decided to do something new. So we invented a company named HANZA with a very simple idea. What if we gather different kind of manufacturing technologies in one company? By tradition, these contract manufacturers has been specialized. They do one commodity. If we group them together and then use this word I used, cluster, so it's industrial parks. We do industrial parks with different kind of technologies. Then you can place your product there and you can have it produced with less cost, high flexibility, and less impact on the environment. So that was the basic idea. And just to show this with the example again, so if we would apply that solution for this, again, very simple supply chain, can be much worse, then the solution would look like this. This company in Sweden, which we are now talking to, would move to HANZA and have all these benefits. So that will be the whole idea. And that's also why we have the slogan, all you need is one. From the Beatles song, all you need is love. Now, it's very difficult to do something new. You like to do what you have done always. Here's another example. You see to the left, product company. It looks like a tilted Christmas tree. You see all the contract manufacturers below the product company. And now you talk to this product company and say that, okay, we have a suggestion. What if you move to us? You get all these benefits. You can reduce number of suppliers and all this. And then they say, but okay, we are focusing now on developing new products. We don't have control of our manufacturing chain any longer. We don't have the documents. We don't have the resources. So would we do this, then we have to reallocate some of the manufacturing. We really don't know how to do this. Then it will end with a good idea only. So to handle these cases, we invented also something called the MIG. Now something happens. We are not only selling manufacturing, but also we become consultants. We added a service called the MIG. It stands for Manufacturing Solutions for Increased Growth and Earnings, a way where we go in and analyze the customer supply chain and come up with a new solution. And then the customer will not just have a McKinsey report saying reduce number of suppliers, but it will also say how to do this. So you are lacking documents, you can do them, reverse engineering, we will tell you how. So you like to move some manufacturing, it can be done, we can tell you why, how. And we can show you all these things, which is the obstacles for going from A to B. So if there's one slide, I hope you remember from this presentation, it's this one. So the difference between HANZA and a traditional contract manufacturer, actually twofolded. Number one, we work with these manufacturing clusters, the industrial parks. streamline manufacturing. And secondly, we also have advisory services. We sell knowledge to our customer, and this MIG is just one example. We also have another one called MCS, but that time doesn't allow to show all the services. But these are the two differences. Things take time. To build a company takes time, and you have to do it step by step in an orderly way. We have created HANZA through defined phases. So the first phase was that we collected. We wanted to get all these different kind of manufacturing technologies. These are our tools. So we collected those. Then we placed them in these 5 toolboxes, our clusters. That was phase number 2. And now we are in phase number 3, and that's also the reason why we are growing a bit faster now, as you saw in the graph earlier on. So this phase goes by the name Strategy 2022, and we have said we're going to do 2 things. Now HANZA already became the leader of a leading partner of manufacturing in the Nordic countries. So our customers are from Sweden, Finland, Norway. Now it's time to attack new countries. The challenge with this tilting Christmas tree is the same all over the world. So we like to add new countries simply. And secondly, we need to trim our clusters, because if we then receive new orders, we have to be more efficient ourselves also. So we have the traditional programs, robotization, automation, Industry 4.0. But in addition also, we are removing some of our customers. Some we got from acquisition, not really a good fit with our business model. So actually we are sometimes telling our customers that you should probably find one of the traditional manufacturers instead. So that's the program we are running right now. And it was because of this phase also we made an acquisition this summer. I don't know what you did this summer, but I was in Germany. It was hot, over 40 degrees. And we finalized a deal with a company named Ritter. A fantastic acquisition. It's a German manufacturer, 180 people located in Remscheid, just east of Düsseldorf. And that was the idea then, to have a new customer market. This is the 4th biggest economy of the world. Of course, we are interested. But in addition, they have a subsidiary in Czech Republic. And listen to this. We had already factories in Poland and Czech Republic. We had electronics and we had mechanics. And for some reason, they had just in between a factory with cable harnesses and complex assembly. What a perfect match. So we got this also in the acquisition. So it was 2 factories we bought. The sales of this company was about 43 million euro. They have a decent earning level of just about 10%. So we decided to pay a little shy of 2.5 times the EBITDA. So we paid 12 million euro, and we divided into 2 parts, cash 7.2 million euro, and then they got 3 million shares valued at 17 SEK each. So that's the latest news from HANZA. Now I will leave over to Lars to give some financials and also tell what does this acquisition mean for us.
Thank you, Erik. Based on the second quarter interim report, these are the figures, and I will come back to how it looks with the new acquisition included. But as Erik said, we have these different phases of HANZA where we now are entering into the growth sort of phase. And that is also affecting the result. In the company, we are moving the clusters, and we have mature clusters in Sweden. We have less mature clusters in the rest of the world, and that is affecting the profitability. So we have a quite higher profitability in the Nordic compared to the rest of the world. And as Erik said, we are also changing some of the customers. We are also taking cost for this IPO, which is affecting the result in 2019 and also in 2018. What's important in this industry is the cash flow and keeping the balance sheet in shape. So we've been working quite a lot with the balance sheet and the cash flow. And that also gives us a possibility to do this kind of acquisitions like the last one in Germany. We also did a smaller one in Finland in the beginning of the year without placing the company into financial risk. So you can see that the equity to asset ratio is still quite strong, even though the IFRS 16 affected us quite heavily since we are renting some of the buildings where we operate in. Looking into this fact also shows how the net debt compared to the EBITDA, how we've been able to reduce that even though we have expanded. So that's really important for us to work with the suppliers, work with the customer receivables and reduce the net debt. And this 2019 is just taking the half-year figures and multiply by 2. And then we will show the acquisition of Ritter, how it looks. And it's quite a big acquisition for HANZA. We come from 1.8 billion Swedish crowns up to 2.3.
Som heltidsjobb. Det finns studenter som jobbar extra. De flesta jobbar heltid och de flesta uppdrag är på POOLIA-sidan på dagtid och Uniflex också, men det finns även de som går skift. Vi tar betalt av kunderna per timme och lönen är ofta en form av timlön. Men sen finns det den här egenheten i de flesta av våra marknader att vi måste betala lön på röda dagar. Det vill säga på helgdagar betalar vi lön utan att få intäkt för det. Det har också som ni förstår betydelse hur många arbetsdagar det finns i en månad eller ett kvartal för hur verksamheten går. Då. Rekryteringssidan fungerar så att om ett företag vill anställa en person tar man kontakt till exempel med oss och så letar vi fram ett antal kandidater som vi presenterar. Och när de sen väljer en kandidat att anställa hos sig själva så tar vi ett premium för det. Och det priset kan variera oftast ligger det mellan 70 och 120 000. Det är lite olika mellan olika tjänster och olika marknader. Hyrpriserna när man hyr en person som börjar någonstans runt 250 och så kan det gå upp till 1500 för de allra dyraste cheferna som vi hyr ut. Och när man pratar om då den typ av personal vi tillhandahåller så är det orangea det som är inom Uniflex och det blåa är det som är POOLIA. Och det som heter interim management det är alltså då när vi hyr ut chefer och där kan priserna vara upp 1500 kronor. Vi har även en executive search-avdelning som jobbar med att headhunta personal. Det är då rekrytering av högre chefer. Där börjar priset på 250 000 kronor för en rekrytering. Tittar man i andra ändan då och tittar på det som är orangea med kundservice. Där är det ju personer, ganska mycket ungdomar som kanske är 18, 19, 20. Ni kanske har barn som själva har jobbat hos oss eller någon annanstans. Då tjänar de 16 000 i månaden. Och priset ligger på då, närmare 250 kronor i timmen. Så det är ett ganska stort spann. Det man också kan säga att det är lite som två olika marknader när det gäller POOLIA och Uniflex. De tjänster som Uniflex tillhandahåller är det alltid fler än en person. Oavsett storlek på företaget i princip. Det gör att det blir mer pressade marginaler för att inköp är ofta inblandade på dem. Det är också lite enklare tjänster vilket gör att det är enklare att starta konkurrerande verksamhet. På POOLIA, den typen av kompetens vi hyr ut kräver en speciell kompetens på insidan. Ska man hyra ut en IT-person eller en ekonomichef så måste man kunna lite om det själv. Det gör att konkurrensen är lite mindre. Tittar man på våra konkurrenter så i Sverige på POOLIA-segmentet så har de flesta en rörelsemarginal på mellan 6-8%. Där har ju vi legat sämre, men vi måste naturligtvis över tid jobba upp oss till det. Tittar man på Uniflex-segmentet där Uniflex har tjänat kanske 2-3% så ligger det faktiskt över det som många konkurrenter gör. De kanske ligger bara på 1 eller 2%. Och det finns lite olika skäl till det. Det ena är ju att det är lätt att ta sig och starta ett bemanningsföretag. Det andra är att just i Sverige så har vi ju en väldigt stor andel multinationella företag. De här vill gärna bemanningsbjässar som Manpower, Randstad, Deco ha som kunder. Så man tar dem till väldigt låga marginaler för att sen kunna använda dem och komma in i andra länder. Och det är också så att en del av våra konkurrenter som i den här nischen så är det också så att det finns ju speciella regler för hur man kan ta ut lön. Och det är tacksamt med företag med stor lönesumma, för då kan man använda så kallade 3:12-regeln, ta ut lön som utdelning. Så att många kanske inte behöver ha så hög lönsamhet för att ändå få pengar i fickan som de tycker är nöjda med. Men icke desto mindre, det ska gå att tjäna pengar på Uniflex-sidan, och det har vi gjort någorlunda historiskt. Men framförallt så tror jag att Uniflex tillskott till POOLIA är två. Det ena är att vi har väldigt slimmade strukturer på grund av den pressade prisbild är. Och det andra är att det finns ganska många ramavtal på Uniflex-sidan som man också kan använda då att få in affärer på POOLIA på. Tänkte vi skulle kika lite på siffror då. Vi börjar med första halvåret här. Så branschen, om man tittar på statistiken som kommit för bemanningsbranschen i Sverige och tittar lite hur det gått för konkurrenterna, så från fjärde kvartalet förra året så började det vika neråt och det har gått 3 kvartal med vikande omsättning. Eftersom konjunkturen är lite osäker och vi har haft en lång eller flera år av uppgång, så är det sannolikt att det kommer fortsätta vara lite sämre tid i vår bransch, att omsättningen minskar. Det brukar bli 5, 6, 7, 8, kanske 9 kvartal. Sen brukar det vända uppåt igen. Det som är fördelen tycker jag för oss på POOLIA, det är att om man tittar på de 10 ledande befattningshavarna, inklusive mig själv, så jag har varit med i 22 år, varit med om 2,5 nedgångar och uppgångar. Och hälften av de andra har varit med lika länge, den andra halvan har varit med om i alla fall en nedgång. Det är ju sagt en ung bransch, en del har startat när det varit goda tider här de senaste 5, 6, 7 åren. De är nog inte lika snabba på att förstå vad som händer och dra i kostnaden eller parera för det. Men jag tycker vi har ett bra ledningsteam som ska lotsa oss igenom den här tiden som kommer framåt. Som ni sett så ökade rörelseresultatet. I samband med fusionen så hittade vi en del synergier. Vi hittade en del annat onödigt också, framförallt på POOLIA Sverige som vi tagit bort kostnadsmässigt. Den delen har gått väldigt bra. Vi är färdiga med stora delen av kostnadsbesparingarna, vilket visat sig i resultatet. Vi kommer nu börja samordna IT. Vi har gjort i sommar. Plattformarna är samma för Uniflex, POOLIA Sverige och Uniflex. Och det kommer kosta 1 miljon i tredje kvartalet, men ge en årsbesparing på ungefär 2 miljoner från fjärde kvartalet i år räknat. Nästa år kommer vi se till att det blir samma ekonomi- och lönesystem på POOLIA Sverige och Uniflex i Sverige. Det ger också en besparing på kanske 1 miljon och det kostar ungefär lika mycket då att göra det. Blickar man ut till de andra länderna så har vi också gjort en del inom IT-delen. Där är det kostnadsneutralt, men det kommer antagligen höja effektiviteten. Ja, kikar vi på andra kvartalet då, som sagt, omsättningen fortsätter neråt. Det spelar ganska väl hur det gått för de andra stora aktörerna. Vi ligger lite sämre, jag tappar lite mera. Men Manpower, Randstad, statligt ägda Lernia ligger i snitt på ungefär de här nivåerna då. Men vi har också då vänt från förlust till vinst. Kikar vi sen då på andra kvartalet här så tänkte jag prata om varje land i sig då. Ja, en ganska bra förändring av resultatet på POOLIA Sverige. Det som är bra att känna till med POOLIA Sverige är att det ser ut som det ofta gör på konsultföretag. Det vill säga att tredje kvartalet, det som vi är nu i, där är det många som har semester och det blir ofta lite sämre. Däremot andra kvartalet är ganska rimligt och ser ut som det ska. Vi ligger som ni ser här på en rörelsemarginal på 2,5% och det har vi gjort de senaste 3 kvartalen. Det är en uppgång från nästan ingenting de senaste 5 åren. Men som jag sa, våra konkurrenter har ju legat på 68%, så att någon gång över tid så måste vi ta oss dit också, så det är ju målet. Tittar man på Uniflex så är det som jag sa, man betalar lön på röda dagar. Och det var ju 6 röda dagar på vardagar och det blir en ganska stor påverkan på resultatet. Däremot i det tredje kvartalet så finns det inga röda dagar på heller, så då blir det allt annat lika, blir det naturligtvis bättre. På Uniflex har vi också en hel del sommararbetare, så där blir omsättningen inte lika drabbad som den blir på POOLIA Sverige. Där blev det tyvärr förlust. Det som har skett här är att de senaste åren så har det varit en fortsatt press på marginalerna som gjort det ganska tufft. Så vi behöver se över vilka kunder vi har. Vi måste naturligtvis kunna tjäna pengar här, men det gäller att hitta kunder som är beredda att betala för den kompetens och flexibilitet som vi tillhandahåller. Kika på Tyskland så det har ju tidigare varit en väldigt framgångsrik verksamhet på POOLIA. Det skedde en förändring i lagstiftningen så uppdragen får bara vara 18 månader. De flesta uppdrag var inte längre än så, men de som var det, de har ju försvunnit. Det är också så att man numera måste betala samma lön till de man hyr ut som kunden i snitt betalar till motsvarande kompetens hos sig. Ungefär hälften av våra anställda låg över snittet och hälften under. Då var vi tvungna att höja priset. Då var det en del som slutade att hyra. Och några sa att ni får gärna fortsätta hyra men ni kan inte höja priset. Så de här 2 sakerna har påverkat marginalomsättning. Och det ser likadant ut för alla aktörer. Nu har det gått 1,5 år och rimligen bör det så småningom inträffa ett nytt jämviktsläge där kanske branschen i och för sig är mindre men där det ska kunna gå och tjäna vettigt med pengar. Det blir förlust här då. Delvis också betingat av att betala lön på röda dagar. Här. Och det är samma sak här. Det blir naturligtvis bättre då. Allt annat lika. Vi får se det även nästa kvartal. Och det kan vara bra att känna till att det finns ingen Uniflex-verksamhet i Tyskland. Det finns inga planer på att starta det heller. Medan ni njuter av Finland så tar jag lite vatten här. Jag fick lite förkylning i helgen. Ja, den finska verksamheten är ju den som går bäst. Den är ju tyvärr den minsta. Men här ser man ju att det går att tjäna bra med pengar i POOLIA-delen. Också tillväxt. Uniflex i Finland kan också tjäna pengar. Det blev kanske lite extra bra just det här kvartalet. Då, för de betalar faktiskt helg på röda dagar också. Men de hade lyckosamma affärer. Men ja, generellt sett så, eller i stort så tycker jag att den finska verksamheten är bra. Och den får tuffa på. Sen får det naturligtvis gärna bli större. Ja, sen har vi Norge. Där har vi ju, startade vi Uniflex för 6-7 år sedan. Och bra tillväxt i år. Det som den Uniflex-delen är inriktad på är olja, gas och bygg. I Norge så är ju vädret ganska påtagligt under vintern. Vilket gör att det går ner ganska mycket i december, januari, februari. Så det gör att det är ganska volatilt. Det är också lite nyckfullt när man har de här stora oljeservicekunderna som kunder och även byggsektorn. Men oljepriset ligger ju bra nu och norska ekonomin verkar ha god fart. Så att båda de segmenten går bra. Det vi vill växa här det är ju POOLIA-delen. Så vi har satsat lite pengar på det under första halvåret och vi kommer fortsätta göra det. Det är ju en jätteintressant marknad och den kommer också hjälpa oss att balansera de här stora säsongsmässiga svängningarna. Men det är ju sin linda, men vi har goda förhoppningar att kunna få den delen att bli ganska bra också. Och även här är det så att vi betalar för löner på röda dagar. Det har skett en viss press på marginalen på Uniflex-delen här som man märker, vilket har minskat lite rörelsemarginalen det här kvartalet. Och vi har också haft lite kostnader för att starta POOLIA. Och den stora biten då som vi ska fokusera på nu närmsta tiden det är i Sverige och vi ska öka vårt försäljningsfokus. Dels i största allmänhet men framförallt de här synergierna mellan Uniflex och POOLIA. Och där finns det ju stora möjligheter för POOLIA att dra nytta av Uniflex och de ramavtalen som finns. Och i våras här så lyckades vi ganska bra. Jag tycker det gick trögt i början efter fusionen men här maj-juni så har det blivit lite fart på det. Och tanken är att vi ska börja implementera det och det bör man ju kunna se i fjärde kvartalets siffror om vi gör det här på rätt sätt. Men det är i alla fall mitt största fokus just nu att se till att det blir fart på försäljningen. Och även den här korsförsäljningsdelen då som står som nummer 2 punkten här. Sen tittar vi längre sikt så är det just digitala hjälpmedel som vi måste nyttja bättre. Det finns en del stora saker. Som jag beskrev så har vi lagt ihop plattformarna, det vill säga samma plattform på Uniflex och POOLIA. Det ökar effektiviteten, sparar pengarna. Men sen finns det det finns en hel uppsjö med saker man kan göra som är mindre men som sammantaget ger en stor effekt. Det gäller bara att hitta rätt där. Det finns ju väldigt många leverantörer inom AI och annat som är beredda att hjälpa till. Men det kan ju inte kosta hur mycket som helst och man måste också veta att det ger effekt. Så att vi tittar på väldigt många olika projekt där men det gäller att välja rätt saker. Sen går ju förändringen lite långsammare än man tror. Den bästa AI är ju fortfarande människan. När kunden beställer så ringer de gärna och säger jag vill ha samma person som förra året. Det går fortare än att gå in i ett system som vi tillhandahåller och kryssa i en massa saker. Det kommer säkert ändra sig men det gäller att hitta de här sakerna som våra kunder och vår personal vill använda så man styr dem dit. Så det är i alla fall någonting som vi tittar på över tid långsiktigt. Och sen kommer det mer fokus på att öka vinsten än omsättningen. Och det beror dels på att det är sämre tider så att bemanningsbranschen kommer ha några tuffa kvartal när det gäller omsättning. Men sen också att framförallt inom POOLIA-delen har vi haft lite för svag lönsamhet och det måste vi komma till rätta med. Ja, det var det jag tänkte säga här så att vi får se om det är några frågor.
Absolut, tack så mycket Jan. Jag tänkte väl börja med, det har snart gått ett år sedan ni fusionerades med Uniflex. Ni har fått en ny profil på bolaget och jag beskriver det lite här. Men kan du beskriva lite mer om de synergierna ni hoppas det här ska ge i framtiden?
Ja, på kostnadssidan så var det ganska tydligt att det fanns vissa uppenbara som att till exempel i Finland räcker med en vd och nu har vi en vd där vi sparar pengar. Det fanns några sådana i Sverige också. Men framförallt har vi kunnat använda den kunskap som finns på Uniflex om hur man arbetar med tunna marginaler. Där har det under lång tid varit mycket mer pressat vilket har krävt att man arbetar på ett annat sätt. Det går inte att ta allting ut till POOLIA men en hel del av de sakerna har vi tagit över och det fortsätter. Men på kostnadssidan är de stora bitarna tagna utan det handlar mer om försäljningen. Och dels att vi lägger lite mer resurser på personlig försäljning på POOLIA. Man har jobbat lite annorlunda där tidigare med bygga varumärken och liknande. Men jag tror att, eller om man tittar på våra konkurrenter så är det väldigt drivet av den personliga försäljningen. Och det kommer vi fokusera vidare på. Men sen också att de som har jobbat på Uniflex med stora kunder och tecknat ramavtal kan nu de har en bredare portfölj så de kan lägga med POOLIA vilket underlättar för avtal. Men de kan också gå igenom alla sina gamla avtal och se om man inte kan få med POOLIA där. Så att det är den stora biten just nu med försäljningssynergierna.
Och skulle du säga att de kundgrupperna som Uniflex har att det finns bra möjligheter att göra korsförsäljning i den gruppen av kunder? Ja, men någonstans 50-75% av kunderna finns det. Sen finns det vissa kunder där det inte går. Och det finns ju vissa specifika kunder som bara är intresserade av POOLIA-tjänster. Det kan vara bank och försäkring till exempel. Men det finns ändå stora möjligheter till korsförsäljning. Mm. Vi såg en tydlig lönsamhetsförbättring inom POOLIA Sverige, trots en tuff marknad som du beskrev. Kan du berätta lite mer om är det bara enkla kostnader som är tagna här eller vad har ni gjort? Har ni även skurit lite på olönsamma affärer?
Nej, det är framförallt på kostnadssidan men, som har gett en effekt. Men sen är du inne på ett bra spår där för att vi behöver se över Uniflex-affären i Sverige och se om vi inte ska ta bort lite affärer som inte är lönsamma. Det är ju naturligtvis viktigt med omsättning men om det inte ger pengar på sista raden och inte ger synergier så måste man se över det. Så det är någonting som vi väl i och för sig alltid tittar på. Vi måste kika lite extra noga här under slutet av året och bestämma oss hur vi gör det nästa år.
Okej. Du nämnde även att du har stor erfarenhet av den här branschen. Lite andra konkurrenter som kanske inte har samma erfarenhet. Vad tror du att ni kommer kunna göra bättre nu när marknaden ser lite tuffare ut?
Nej, jag vet ju redan att när vi såg att marknaden vek lite så tittade vi över kostnaden en extra gång på just de orter där det varit stora neddragningar hos kunden och väldigt snabbt på bollen och minska på vår egen personal. Sen handlar det också om, det är en kulturfråga hur man hanterar dåliga tider. Det gäller att försöka behålla en god stämning bland personalen. Och har man varit med några gånger så är man bättre på det än man aldrig har varit det. Det är många som inte vet att bemanningsbranschen är så konjunkturkänslig som den är. Och det finns en del som hoppas på att det är tvärtom, men så är det inte. Man kan titta och sätta ut i USA som har haft bemanningsbranschen i 100 år. Och det går upp och ner. Över tiden blir den alltid större i varje konjunkturuppgång, men den svänger.
Och vad kan ni påverka när det blir en sån här marknad? Vad är det primärt ni jobbar med för att det ska bli ett bra resultat ändå?
Nej, det är framförallt på kostnadssidan som man måste reducera på de ställen eller enheter där det går lite sämre. Men sen också att fokusera på de kunder som är mindre konjunkturkänsliga. Och sen se till att bevara en god stämning bland de som jobbar med internt med rekrytering och försäljning. Men sen finns det såna allmänna saker som man alltid måste titta på. Det är lite lokalkostnader och lite overhead och försöka finslipa det.
Mm. Om vi ser på lite andra marknader än Sverige så både Finland och Norge växte i kvartalet som vi såg. Ser du fortsatt en bra marknad där framöver?
Ja, Norge har ju liksom sin egen ekonomi och den är ju rätt kopplad till oljan och nu verkar ändå oljepriset ha stabiliserat sig på någon slags rimlig nivå. Det är inte den här nedgången som kom för några år sedan när det gick från över $100 ner till vad det var 40. Det rensade nog ut en del aktörer och blev ett uppvaknande att även de kan påverkas. Så nu känns det som att man har en sund struktur i oljeindustrin där och man vet ju att man kan tjäna pengar, alltså oljeföretagen, så de kommer ju finnas kvar där. Och vi är ju underleverantörer till de som servar de olika delarna av oljeindustrin och det kommer också finnas. Så att om vi sköter oss så ser det ju väldigt bra ut där. På byggsidan där så, ja, det känns som att det fortsätter att vara bra tid även där i Norge. Finland, konjunkturen där är ju lite som den svenska, men den kommer igång lite senare. Sen är det ibland en fördel att vara liten, för då blir man inte lika beroende av konjunkturen. Men än så länge så har vi inte sett någon avmattning där, men det är klart, det kan ju komma fort, det vet man inte.
Så en liten risk att det kanske kommer eftersläpande, det vi har sett i Sverige nu?
Ja, risken är kanske större i Finland än i Norge i så fall.
Om vi kollar på Tyskland så har ju den här nya lagstiftningen inneburit tuffare tider. Hur ser det ut bland konkurrensen? Har ni sett några aktörer som har haft stora problem också? Ja, tittar man på Manpower så har de tappat 20% av omsättningen också. Och det har påverkat lönsamheten. Och ibland kan det vara så att första reaktionen är att man tror att det här kommer att ordna sig. Sen när man märker att det inte gör det, då måste man dra ner på sin egen säljkår och liknande. Och när alla har gjort det så blir det ju balans i marknaden igen. Och när det inträffar får vi se, men det borde ju inte vara allt för långt bort. Just i Tyskland kan det också vara en fördel med lite sämre tider, för det har varit så väldigt svårt att hitta kandidater. Så det är kanske, man inte ska säga allt för högt, men liten arbetslöshet är ändå bra för oss, för att det gäller ju att hitta personal. Och just där har det varit lite extremt. Då. Mm. Ja, slutligen då, vad kommer du fokusera på mest kommande kvartalen? Det är att i Sverige se till att de nya avtal som kommit in via Uniflex eller Uniflex och POOLIA här nu strax innan sommaren, att vi kan växla ut på dem och se till att det blir omsättning och därigenom vinstkronor. Yes, med det vill jag tacka Jan Bengtsson med en stor varm applåd.
Okay, good afternoon. Welcome to the second half of this Introduce Day. My name is Oskar Wikström. I work as an equity analyst here at ABG. And this afternoon, we are listening to Johannes from Note, who will tell a bit more about his company and where they're headed. So I'll leave the word to you. Thank you.
Thank you. I don't know how many of you that knows what Note is doing, but Note is a company that are doing what is called contract electronic manufacturing. We are doing electronics and box build for other customers. So we don't own any products, we produce according to our customers' specifications. That's our business model. Currently we are 8 sites. We are present in 5 countries with our own manufacturing. We are, last year we were turning just below 1.4 billion Swedish. We are just over 1,000 employees, and we have a distribution where we are about 300 people in Sweden, 300 in China, a little less than that in Estonia, and then we have a small unit in Finland, and we have 2 units in UK. Sometimes I get questions, why do we have 3 sites in Sweden? But we think that footprint makes quite a lot of sense for us because we have different competences in the different units, and we have diversified our customer base to fit those sites. So if you take Lund and Torsby, for example, they are quite different in the setups, and we have different customers that choose the different sites depending on what competences we have. So in this industry, many people tend to think that we duplicate what we do in all the sites, but I'm a little bit on the other side. I think that all sites should be different. That adds value to us. If every site were the same, then you need to be very, very big. And if you look at the EMS industry, you can say that the company that put this industry on the map in Sweden was Flextronics in the late 90s, when they were acquiring sites from Ericsson, ABB, and others. They were a lot of doing this. They wanted to have the customer to feel at home every time they went into a Flex site. We think the customer should feel at home, but we should be different. We think that is a strength to us. We can come back to that a little bit later. But this is our company timeline. We were founded in 1999, and that is, I would say that is in the medium time frame when EMS industry was started. I would say that it started somewhere in the early 90s, and then it exploded with the outsourcing trend that were in the 90s. And at that time, all the companies like us, and some of you might have listened to HANZA earlier this day, we were acquiring customers' production units, and then we took over the production and we started to produce, and everyone was chasing more and more business because everyone knew that the customer may choose to leave. Normally, a carve-out contract is 3 to 4 years of production, and then the customer is free to do whatever they like. And that is one of the reasons why Flextronics had a very rapid growth in those days and very rapid decline when these contracts were ending, and all production was basically moving abroad at that time. So you can say at the time until from 99 until 2005, 2006, there were a lot of acquisitions and a lot of carve-outs. Then you can say that the industry went into some kind of, I would say, harmonization, and a lot of these carve-outs were actually closed. Note has been in that, how should I say, that wheel as well. We bought a lot of companies. We bought a lot of production units from customers, and then we have also closed most of them. So it has been some kind of closed loop from starting in the mid-90s until 2012, 2013. After that, I would say that the EMS industry has entered what I call some kind of maturity. So what you see now is what you get. We are happy with the footprint. All the sites makes a lot of sense. We have a good split between the customers in all our sites, and many of our competitors are quite similar to us. So today you can see that what we buy, for example, when we acquired Speedboard, this company makes a lot of sense. We know that the UK market is very interesting. It's fragmented. They like to do business within UK. So it makes a lot of sense for us to increase our presence there. So we don't buy it because we want to take the production, move it to our low-cost manufacturing sites. We buy it because we think it has a good value as a standalone company. So that's the strategy. And then we believe that we can also approach these customers to attract new business that we can move to our low-cost manufacturing sites. So today I would say that the market is, in some sense, quite mature. I don't foresee many of these carve-outs coming out any longer. There might be a few ones of them. We are always open to discuss that, but we see more that we acquire sites that add value to us from a broader perspective, meaning that if we add acquisitions, it should be an acquisition that we believe is strong and has a good standalone value. That's how we see it. But you can see here that we had a lot of sites that we acquired. We had at one time, we had 5 or 6 places in Sweden, quite small every one. And we tried to have some NPI activities, and also we tried to drag production out of those units, move it to low-cost manufacturing sites, and keep the customer interfaces and stuff like that from the Swedish sites. But it became very complex, and it didn't add the value that the customers was prepared to pay for it. So profitability was low and complexity was high. So the current structure we have is that all our 8 units are P&L units. They are handling the customers by themselves. We have some how should I say, harmonized key account management for larger and global customers. But all customers that are local, they are handled locally, even if it's in China or Estonia. So that's the structure that we work from today. And it works, as we see it, quite well. So what do we do? I often say that we get questions, can you help us do the product design? And we always say no to that. We can guide our customers to companies that are specialized in that, but we don't want to get into designing our customers' products. We rather take the product when the design is relatively frozen, and we help them to do the industrial design. How should it work? Have they designed in complex procedures and complex components? Then we help them to design them out and design more producible designs. So we try to help the customers in the manufacturing design phase and in the industrialization phase to ensure that the product has good producibility. We often look into how can we improve yields, how can we ensure that the components that they choose have a long lifetime and so on. We don't want them to design in components with a very short timeline. Then we know we get into the ECO handling, and we know that the customers may have regulatory approvals and stuff like that, and then we know that it's a long procedure to change these designs. So that's what we do in the earlier phases. Then our core business is serial production. I know that some of my colleagues says that we are selling a service, but if you ask our customers, they say that we are selling production. So production is our service. So I often talk about how do we ensure that our production service is efficient and it stands up to our customers' requirements. That is the basis of what we do. So you can say that even if we have this big slide, we have 90% of our sales is coming out of the one square that's called serial production. Then we add all the services that are needed for the customers to have efficient serial production that we surround our business with. So that's how we work. And these lines you can say is basically, they're often shared services like sourcing, bill of material management, where you scrub booms, where you go into and see, okay, how we selected components that have a good availability on the market. Have they designed out all the sizes and stuff like that? We try to ensure that we don't need to do ECOs in the serial production phase because that costs money and it costs time. So that's what we try to do. Then we have some more specific things where we have lately entered quite heavily into the medtech field. We have added clean room capabilities in more sites, and we are adding more clean room capabilities in more sites. We think that the business goes into more and more complex production. We have especially our site in Torsby that are designed into handling components and products for rough environments. We do products for the mining industry. We do products for automotive and other areas where there is very hard requirements on the awareness of the products and the durability of the products. So we have this site is specified to handle these kind of products. So that's what I mean in the early phase where we try to set up different sites to handle different customer segments. If we are adding all the capabilities in all sites, we will have hard to earn money on the less complex products. So if we have low complexity, we go to sites that are set up for handling that, and we have a different margin objective in that case. So we try to guide our customers to choose the right site for their specific products. What we do is that we look at in the upper chart here, we say this is how our customer look at our products. And we believe that we should be very strong in all phases, but the maturity phase is where they earn the money and where we want to earn our money. So we help them in the introduction phase to make that as short and smooth as possible, but we also help the customers in the after sales activities. We have several customers where we are handling all their spare part components, where we handle service on the customer's products and so on. So they send back the products to us, and we do the repair and the maintenance of the products. So we try to see ourselves as a one-stop shop in that respect. I don't like that word, but that's how we try to look at ourselves. And as I said before, we are 90% is production, 50% of the sales is pure PCBAs, and 40% is boxed electronics. And we can do semi-finished up to finished products. It depends a little bit. And we also do, for some customers, we're also handling their logistics. So we ship the products to their warehouses or their customers. It depends a little bit how the customer wants to see it. But we have the capabilities to do that. And some might think that this grows a lot. I would say that it's fairly stable. Often we do sub-assemblies and the customers are doing the final assemblies, and then they want it to be shipped to their factories, and we ship to all their units instead. So it's a little bit depending on which segment you are, but the further you come into making a final product, the more likely it is that we also handle the distribution to the customer warehouses or the customer's customers. So we have that capability, and we do it in quite many instances. Our vision, it's very simple. We should add combining local presence, global reach with close interaction. But we also say we should be our customer's best partner. But what do we mean with that? It's not so much about words. What I have said is that we should be the number one in delivery performance in this industry. If you are that, you take away one of the biggest headaches that our customer has, that we are late with deliveries into their production or to their customers. So today we are running our sites with more than 95% delivery performance. We are often reaching 96 to 97% on first confirmed date. That is the highest in the industry. And we are driving this even higher because we know that this is one of the biggest concerns of our customers. We also work a lot with increasing our efficiency and increasing our quality performance within the sites. If we can be number one in delivery performance and number one in quality performance, then we know that we will be a natural choice for our customers to choose for the next generation and for adding more products to us. So we believe that being very, very good at our production, which is our service that we provide and which is our core in our industry, if we are there, we will always be the natural choice for our customers to choose. So that's how we have tried to build our vision into work. Our customer base, we're often perceived as being very heavy on the industrial segment, and that is quite true. We are about 60% are coming from industrial customers. But then again, industrial customers for us is a very, very broad area. So it's not that we are very single-minded and that we have one stream of income. In our industrial sector, we have customers like Trimble, we have customers like Delaval, Atlas Copco, ABB, and others. So it's a lot of big companies with very diversified product ranges. So we are not that dependent on one customer or one segment. So in my mind, the industrial segment is enormous. But we are also growing our other segments quite well. We have invested in our medtech facilities, and we are today ISO 13485 certified in 4 of our units, and we are probably adding 1 or 2 units during next year into the medtech sector. This is one way of increasing our competence. It's a good area to be in, but it's also customers are more dependent and more requiring more processes. So we need to be very smart in where we add this capability because it also costs money. But the good thing with medtech is that if you have a customer that are certifying the product, then they are very, very hard to move it, especially if they target the American market and they get FDA approvals, then we know that to move from us is going to be very, very tricky. So therefore, medtech is a segment that many of our competitors, together with us, are targeting. We also grow in our defense area. Defense in Sweden has come into some kind of upswing, and we see that also from our customers, that they are demanding more and more production from us. But we also put up high-end consumer. You can say, why do you have a segment with 2%? That's too little to show here. But it's those customers that are requiring the full logistic chain. So therefore, we add it here because we want to talk about it, that we have this capability. So I expect that the high-end consumer segment will grow. Maybe it's not going to be our biggest segment within the short time frame, but it's a very important segment because it adds one more service that other customers don't require. So therefore, I think it's important, and it's important that those customers also feel at home in our company. But if I look at this, I would expect that the industrial segment will probably decline in size over time. I expect medtech, high-end consumer to grow. I also expect defense to grow, but not that much because it's a quite narrow market. Communication and industrial will continue to be relatively big in their sizes, but lose a little bit over time. That would be my expectation. Then again, we see that we are winning quite nice industrial contracts, so we don't look bad upon those. So don't get me wrong here, but I would expect other segments to grow more because they are smaller in size. But otherwise, I think that we have a good mix here. And also the industrial segment is very, very diversified. So it's not 1 or 2 customers or 1 or 2 segments. It's huge and broad. Okay, our growth, we have 3 avenues: existing customers, new customers, and acquisitions. We say that we should grow 10% yearly. We are currently delivering over this number, so we expect that to continue. Acquisitions, we see that we should grow 10% organically, and acquisitions should come on top of that. That's what we are targeting internally. Our financial targets, we have talked about them growth. For me, anything below 10% is actually standing still because the industry is moving, so you need to grow to get the momentum. We need to have an organization that are used to growing, because if you're standing still and then you start to grow, then you start to add people in a lot of areas. If you grow every year, you have that in your DNA, and it becomes very, very easy. So we talk a lot about growth, and I think that we are currently adding that as a competence within the group to always grow and always strive for growth. So this is very important for us. Profitability. I often say we should be slightly better than our competitors, than we are quite well off. But the industry as such has over time started to come up in profitability. When I worked for Flextronics some 20 years ago, everyone thought that if we can earn 3%, we are very happy. Today, we are much more ambitious than that. Our capital structure is very important for us. We should always keep a strong equity. And we also have a dividend policy where we strive to exchange some money out to our owners as well. So some numbers. This year we have had a quite good start, 28% growth. This should be read into 3 different areas. We have one area that we can't control, which is currency. 3% of the 28, give or take, is currency. Then the 25% that's left is about half is the Speedboard acquisition and half is our organic growth. Our profit, we are growing about the same as our sales in the gross profit, but on the net profit we are growing quite faster. This is also where we can utilize our infrastructure that we have with the factory structure that we have. So we expect more to come from that area. I often get questions, where are we heading? And if you look at these graphs that we are quite proud of, we are seeing that on the right graph here we see the growth quarter by quarter for the rolling 12 months per quarter. And we expect that to continue, part of it driven of course by the acquisition in November, but also with the high organic growth that we currently see. I get some questions, have we reached a plateau here or where do we go from here? We are also saying that we don't give out any guidance to where we are ending up, but we can say that we're 0.7% higher in our operating profit for the first half year compared to the first half year last year. And we are adding new customers that we have, where we have contracts that we have been awarded over the last 9 to 12 months that are currently going into production. So I will repeat what I said in the second quarter report, that we still believe that we have all the fundamentals in place to continue the growth in the same pace as we're doing. That's what we're still seeing.
All right, thank you very much. We also have time for a few questions. I would like to stay on the subject of growth and organic growth. Just in your opinion, this market, what is the market growing at? What sort of rate? And how are the competitive dynamics here? You mentioned it's maturing. What's your market share? What's your competitors' market share? Can you continue to take market share? And just how sustainable do you see this organic growth?
We can start with saying that NOTE may be 0.1% of the world market, so we have some possibility to gain market share if you put it from there. But the market is growing with 4 to 5% year over year. Then you can say, will 2019 be a year of 4 or 5%? It's very hard to say, but we believe that we still see that there's a quite good growth in the market. But we also see that since we have been quite successful in adding new customers, we have also seen that we are growing quite much faster than many of our competitors. So I would say that the industry is growing, driven by all the electronics and all the communication that we want to have in our lives. So we see that this is a good market to be in, and that we are managing to get the bigger part of that growth.
Understood. And in terms of this organic growth of 15% here, for example, how much is new customers of that? Or how much is existing?
I would say that it's basically half and half. Okay. And one thing that we should keep in mind is that organic growth with your existing customer, that is probably the best, how should I say, the best view that our customer sees. If we can be good in retaining the next generation, if we are good at that, we know that the customers are approving our service. If they are not happy, they would choose someone else, because when you go to a new revision, that's when you have the biggest chance to choose another supplier. But as long as we have a good retention rate, as we look at it internally, then we know that the customers are giving us a good result in how we perform towards them. So I would say that half and half currently. Okay. I expect us to be a little higher on new customers in the coming quarters.
Sure. Okay, thank you. And one more question. I think we have time for one more. I was a bit curious. You showed that you want to basically provide most of the growth within the peak of the of the product life cycle.
Yeah.
But you also have some after sales, and after sales are usually pretty interesting to investors. And I was just wondering if you could just comment a bit, how much is after sales today, and what's the profitability of that compared to the more traditional production business?
I will answer it in this way, that the less volume manufacturing like it is, the higher the profitability is or the higher margins you have. Then you have to work more with those kind of products to make the profitability, to retain the profitability, so to say. So I would say that our after sales are quite low in percentage. I don't have a number on it, so I will not guess and state something that I cannot commit to. But it's an important part, and we often see it as a service, but it's a profitable service.
All right, understood. I think we have to cut there, unfortunately. But thank you so much for coming.
Thank you.
Okay, welcome. Time for our next presenter. We have Anders Fogelberg with us here from FLEXQUBE, who will talk a bit about their business and what they're doing. And I'll just let you get to it. So thank you.
Thank you so much. My name is Anders Fogelberg. I'm from Gothenburg, where we have the headquarters of FLEXQUBE. I'm not sure how many know about FLEXQUBE, but we design and manufacture modular and flexible material handling carts for intralogistics. So that's mainly for manufacturing industry and distribution industry. We have here on the first page our newly launched e-cart, which is our autonomous solution for material handling. And this morning we actually got a press release that it was certified and approved with all the different machine directives and other certifications needed for the European and North American market. So that's a very good news for us. This is me. I've been in this position since 2013. We founded the company in 2010. It was me and two other friends in Gothenburg who came up with this idea. And since 2017 in December, we've been listed on the First North market. I'm going to start with a video here as an introduction. Maybe, or it was not video. Can I get this started maybe? Is there a video here? No? Okay, we'll skip that then. I'll tell the story here. So this is a little bit about the story. As we said, 2010 was the start of FLEXQUBE, and then in 2012 we started with the sales. And North America has been a very strong market for us since that time. And 2018, about 80% of the order intake was from USA and Mexico together. This year we've focused on the launch of the e-cart as well as starting a UK company. And despite the Brexit coming up here, we believe that that is a long-term growth market for these kind of solutions. Last year we started the German entity, and Germany is also a market in Europe that we are now focusing a lot more on. Looking at some of the figures here, we had a very good growth in 2018. Where we grow the order intake and net sales with 71% and 138% respectively. And then in this year we've had a little bit of a slower period, mainly because of the automotive sector in North America slowing down quite much. In first half year of 2018, it was a very strong order intake for us from that sector, and we actually had a share of 67% of our order intake in North America from the automotive sector Q2 2018, and this year it was down to 33%. So that has been a challenging period for us, but we have now also broadened our sectors. We work more with other industries. I'm going to show here a little bit of examples. You can see below there the different sectors, for example in the wind power industry, which is a very growing sector for the time, as well as other distribution centers like Wayfair, which is a company doing furniture deliveries in the US. We're also historically very strong in machinery and tier 1 automotive suppliers. So in the machinery sector, you see some company names there as well. And now we are trying to see whether we can be part of the transformation going on in the automotive sector to electrical cars, of course, which will require a lot of new investments. And then especially with the e-cart, we see that we have a product portfolio that is futuristic and adapted to that kind of market. So we have the production also outsourced. So we have it here in Sweden and we have it in Georgia in the US. We're about 30 employees in the company directly employed by FLEXQUBE, and then we have outsourced manufacturing, distribution and assembly, as well as design resources in India and R&D. This is the concept then, so it's like adult Lego or industrial Meccano, we usually say. So instead of welding carts together, we bolt them together, which makes it then possible to adapt and adjust and so on in the future if needs change. Also, if a cart is damaged in an accident, you can just replace that specific part. So I usually say that you wouldn't buy a car in one piece. It doesn't really make sense if you have to do some repair or service to it. And it's the same with this, actually, that you buy a cart which is bolted together, and then you can fix it, you can adjust it, and the life cycle then extends, and the companies make more money, basically. In the design process, which we work with, we have a called subway process. So we try to work with the customer in creating the customer unique solutions using these standardized building blocks and the standardized interface. And then we come up with these solutions that could look like this. So regarding material presentation, for example, to present components used in the factories in an ergonomic way and in a quick way for the operators to assemble it, or with material transport to optimize and run safe transports, especially without forklifts then in the companies. So some pictures here. We see a picture from Boeing, where we have a few carts from us, some shelf carts and some flat deck carts. We see also a Caterpillar picture here, which is another customer. We have a huge installation of carts with the new Volvo plant, the Volvo Cars plant in Charleston in USA, who became a customer at the end of 2017. We have more than 1,400 carts in use there at the moment. And we are also now the distributors of this lift runner mother-daughter cart system, the yellow piece you see in the picture there, which is a way of transporting the trolleys internally in the factory. It's a German product, and we are now the exclusive distributors since March this year of that product. And there are also 80 of those frames, not all sold by us, at the Volvo plant at the moment. Atlas Copco is also a new customer from this year, not here in Sweden, but in South Carolina in the US. We have also been selling quite a lot to a company who makes trains in USA called Siemens Mobility. It's in Sacramento. And also the train sector and the electric bus sector is also a prioritized sector for FLEXQUBE now and going forward. We also added another train manufacturer to the customer list called Alstom this year. Wind power is also a very interesting segment. And here you see a picture from Vestas from Colorado, where we have sold at approximately, I think, 7 or 8 million kroner total. So it's quite a big customer for us. Looking at the second quarter, it was a little bit of a disappointing quarter in terms of order intake, but you can see here the net sales grew by 5%. We added quite new interesting customers, and we also saw positive signs in the European market, where we grew the order intake by 26%. As I said, automotive sector had an impact on the overall order intake, and then the EBITDA was at -5 million kroner. And this is, of course, also a little bit affected by the heavily concentration of marketing activities, trade shows in the second quarter, but also, of course, that we have e-cart development during this period. This is the lift runner product I talked about before, and this also is an extension to our product line. We match up our modular cart concept with these frames, and that creates a very unique concept in the market. So this lift runner concept is by many considered the market-leading target train solution. And then with the FLEXQUBE concept, the customer gets a very modern and good solution. So we've been working with this company since 2012, and now we are the exclusive distributors of this product in North America. So that includes Mexico, USA, and Canada. Looking then at the automation market, you see here on the right-hand chart, on the right-hand side there, that the market for automation solutions, warehouse and logistics robots, is considered to increase quite a lot over the coming years. And this is where we are now launching our e-cart into this segment. So now I have a video, hopefully here.
EVs actually, they actually do a lot for us. Right off the bat, I would say first and foremost, safety.
We're really embracing it, and our team is embracing it. It's allowed us to put our people in bigger or better quality positions.
This is making my life easier because I get to stay in one place and I get to focus more on quality of our pallets.
It's eliminated a lot less intersection traffic with pedestrians and equipment.
I'm actually growing, which is going to benefit my future. It's going to benefit the people in the company, and we're moving forward and it's not standing still.
This is a situation where we get to advance in our jobs. It gives us the opportunity to train in other departments.
To be perfectly honest with you, I believe the sky is the limit.
Be a part of it, be proud of it, go home, tell our families that we're being a part of a company that's growing and that we're very proud of it.
We'll always have work for our associates. This allows us to scale the business, create more jobs by driving revenue and being more important to our customers.
So what you could see there in the video was an AGV, autonomous guided vehicle, which was then connected with our cart. That's not the e-cart, that's a fully mechanical cart, and we are, at the same time we're selling the e-cart as our own autonomous solution, we are delivering carts to other makers of these autonomous solutions. And in this case, you saw that red AGV underneath the cart. So it's also a very interesting market development where we can both go with our own solution, but also learn a lot about other suppliers in this marketplace each week now. So we have also a huge library online with 3,000 to 4,000 solutions that the customers can pick from, and that is also a unique position in the market.
Yeah. And in terms of profitability as well, I mean, are you gonna? You mentioned that you have some further solutions to this e-card that you would like to add on and so forth, and you're investing a lot in this. In terms of profitability, when do you see yourself returning positive profits to investors, for example? What's the strategy now? You're still focusing on growth? And
yeah, the focus has been, of course, since we came to the stock market to run the growth focus, and also the e-cart. Get this product into the market and how quickly we can get some orders. We are not happy with the order intake in the first half of this year, so right now the focus is to regain the growth theme in the company. So before we take on too much other costs, we have to make sure we set a new level of order intake and sales, and before we enter like maybe the growth theme again then. But I think we haven't set the firm target for when we need to be profitable and so on, but right now we have focus on the growth.
Yeah, understood. I think we have time for one more question. I was just thinking a bit about these orders and so forth, and just in terms of, you know, what's your visibility with clients in terms of orders? So like how far from they put an order in do you deliver, and what's the outlook in general? I mean, this was, you know, a tough quarter.
Yeah.
But beyond that, the outlook, could you comment on that?
Yeah, we have a very strong pipeline going into the second half of this year, but the pipeline is also extending quite from this week until maybe end of next year, because the sales cycles are very long. So, for example, with the Volvo plant in the US, we started the discussions 3 years ahead of the first order, basically. So we're already now talking about new investment in production plans in 2021, 2022, and so on. So it's a long sales cycle. But the visibility in terms of orders and so on is that you get an order today, you usually get delivered within 4 to 12 weeks and so on, no matter what the size of the order is. So it's basically a quarter ahead, you could say, that you could see where you're running.
Yeah. All right, understood. I think that's what we have time for. Thank you so much for coming, and good luck with everything.
Thank you so much.
Okay. All right, welcome. We'll go ahead with the next presenter, Anders Karlsson from AQ Group, who's here to present their business and where they're headed. So I'll leave the word to you right away. Thank you.
So, hello everybody. Thank you for the opportunity to be able to present AQ Group in front of this audience, and thank you for your time coming and listening. My name is Anders Karlsson. I'm now the CEO for AQ Group since 1 year back, actually on the day. I started exactly 1 year ago. I'm very happy here because I have the founders and the two main owners, Claes and Pio. They're also here checking them up when I have the presentation. They can also fill in if you want to talk to them after. For those of you that are here can go and have a chat with also Claes and Pio in the break afterwards. And AQ Group, I start with an introduction. AQ Group, we are proud because we have 99 consecutive quarters with profit. And we have had a fantastic growth record, both organically and from acquisitions over the last 25 years. And we are now up to 41 production units or factories or companies, entrepreneurial companies around the world. And we have around 6,500 people working in these 41 production units. And we have a set of core values. I mean, I think when Claes and Pio started the work, 25 years ago, you had not put these core values in paper. But the last 5-6 years, they've really been documented as well. And they are really a good asset in the daily life. They are a support for all the people working in AQ. And when we walk around and travel around in AQ factories, these are typically printed on the walls. In India, they are even on the footsteps when you walk up to the canteen and have lunch. So there are some key things in the core values that is really helpful and that makes you a good sub-supplier to demanding industrial OEM customers, because that's really what we want to be. But first of all, I think it makes some sense to talk a little bit about what we do. And we are, really in the people service, but also to some extent, the hardware business. And as an example, we are doing sheet metal processing, and we do it in stainless, we do it in carbon steel, we do it in aluminum. We are cutting, bending, welding, painting, and also printing the brand logo of the customer, etc. So we can make all kinds of stuff in sheet metal. And customers here, for example, GE Healthcare in stainless for medical industry, the buses, trains, and many other applications. We're also very strong in electrical enclosures for automation business. So we do lots of automation panels for all kinds of OEM customers. Then we move to wiring systems or wiring harnesses. And wiring harnesses is when you have an OEM customer, a big industry that has their manufacturing and assembly line, instead of doing all the assembly work on the production line, you prefabricate the wiring harness. So you make thousands and thousands of wires and connectors, and you put them into connectors. So when the bus comes to the assembly line, they just put up the big harness from AQ, and then they connect, in 10 minutes, they do assembly work that we have spent lots of time in AQ to do before. And we can really do this with high quality. So you can imagine doing 10,000 of connections before, and everyone has to be correct. And they can never, get loose. So this is really high quality product that is helping assembly customers to do very good work. This is inductive components. And we are, AQ is pretty much into electrification. So we are working, with the solar inverters, with wind power, with electrical engines and motors. We work with trains, with the drive package or the drive line of the trains. And all these kinds of applications, you have power electronics. So you have IGBTs and you have thyristors, and they make sure the train can move or the motor can create the motion, etc. But when you do that, you create electrical dirt. You have like emissions from the power electronics, and they have to be cleaned out. So these are like electrical exhaust fumes that take care of the problems coming from these electrical products. And this area we really like because in this business we have more engineering value added in AQ side because we design these filters and reactors to take care of the electrical emissions from the power electronics going into a number of interesting segments. And here we're also happy now because we have made an acquisition this year We added a company which is 10% of the total ELLIS group now, called Trafotech, and they were doing very well in this field for many, many years, supplying to ABB and Danfoss and Siemens and many other customers, doing stuff for electrical motors, but also for the wind power and the renewable energy in shape of solar. But we have been very big in rail. So we are doing this for all the big railway manufacturers, doing the electrical systems of the trains. Injection molding, we can do things in sheet metal, but we can also do things in plastic. And this is a very interesting product because you are working very close. In all our business, we are working very close with the engineers of the customer, and we're helping them to design the cost-efficient and very good and useful part that they can have in their machines or products. So here we have tooling expertise, and we have lots of machines like this, where we can make plastic parts with many, many different plastic materials, and we can do them around the world. And then, automation and digitalization is a lot of buzzwords in the industry today. But automation looks like this. So when you do automation, they look exactly like this. And I come from ABB before, so I used to sell all these kind of products. And when you make automation, you have an electrical enclosure, you have a box, and you have lots of automation products you assemble with wires, and you test it. And AQ is probably the most competitive panel builder that can do automation panels, and we are especially good if you do automation components and an enclosure that is custom built for the customer. If you on a train, for example, need to have a roof module or something below the train, and you need to design that, especially to the needs of the customer. We can design, we can manufacture this enclosure, we can fill it with automation components, and we can provide an automation solution for the OEM customer. And then also we make complete machines. And we say that one thing that is very important for AQ is that we have entrepreneurial companies. Every company in AQ is driven like an entrepreneurial company. One of the best examples is this machine, because the company that is assembling this machine for the customer, we don't design the machine, we assemble the machine for the customer. But the company doing this started to make designs for this machine. But then they said to themselves, why don't we make the complete machine 10 years from now? So that was the vision they had, and now they are making the complete machine for this customer. So that's a very good example of the entrepreneurship and the power of entrepreneurship. And they also make lots of welded stainless parts here, and they make machine parts, etc. They also have their own sensors in this product, as an example. So, how are we doing in time? Where's the timekeeper? We don't invent a lot of bureaucracy and a lot of complicated things. We try to do things really, really simple. We try to do what the customer want to pay for. We talked about entrepreneurship. In entrepreneurship, you really need to go for the opportunity when the opportunity comes by, or go and find the opportunity. You also need to be commercially strong in working with the price and with the cost. And you also need to really manage the money like it's your own money. So we have many good MDs and many good people working in the companies driving their business on a decentralized basis. And then, of course, you need to be competitive. If you are not competitive, you will not sell anything to the supply manager of the customer. So you need to be competitive, and you need to have your operations in order. And finally, you need to be very, very open and direct and report the bad news quickly and really say things like they are and have an open dialogue so we can fix the problems that come up over the journey. We can talk for hours, and when we acquire a company, first of all, we look very much for companies that fit these core values. So we look for companies, and if you are a good sub-supplier to an industrial OEM, you typically work very much in this direction. Because otherwise you will have a problem to supply with the total quality. So first of all, we look for the core values when we acquire companies. But we also, when we have acquired the companies, spend times in workshops where we go there, and talk about the core values and try to implement them step by step. Here we have some issues with the PowerPoint, but we can live with that, right? These are the targets. Quality needs to be 100%. On-time delivery need to be above 98%. We are a financially strong company. As a sub-supplier, our business is very fragmented. So there are many sub-suppliers around the world, and we have a very little market share. So from being financially solid, you are a better partner for the customer, and you can take market share from the sub-suppliers that are not financially solid. So that's like a competitive advantage in our business. And then we have an ambitious profit target, 8%. You can see here on this slide here, we did 8% in 2016. We were above 8% here, but then we had some setbacks. We had 4 factories out of the 41 that did not perform. So my predecessors took very good action last year, and they restructured these 4 factories. And that is helping us this year when you read the quarterly report that we are on a different level now in 2019. And we still grow. We grow both organically and we grow from acquisitions. So we continue this journey. And where are we then? We are, of course, still in Sweden. There are many items, that has high transportation cost, mainly in sheet metal and plastics and others, and also with assembly. So we're still quite a few people in Sweden. And we also have very good salespeople working close to all the customers you have heard about and that you listen to today. We try to be, with every customer in Sweden trying to sell. But then we are very much an Eastern European operation. So we are in Estonia, Lithuania, Poland, Hungary, Serbia, and Bulgaria. And really from the beginning here, Claes and P.O. started in Västerås and Enköping, outsourcing some factories from Västerås. But you did a fantastic job in going to Bulgaria and finding a factory that was basically nothing, and then develop them into a super and fully qualified supplier for all kinds of very, very high quality OEMs. In the rest of the world, we are in India and China. And in India and China, we are present with the full set of AQ divisions. So we are in all BAs. In North America, still, we are mainly in wiring harnesses. So here we operate more in one of the BAs, not in all. Time? 5 minutes. 5 minutes. Then we move on to the story we told about the beginning, and then we told about the Bulgarian expansion. And since then, AQ has been growing all the time organically and from acquisitions. And in the beginning, you did very good acquisitions. You picked up assets in when there were hard times back over here. And AQ also acquired assets back here. You can see here that those of you that wonder how cyclical we are, you can see here in the last recession how things went, because we had very good exposure to rail back here in 2009. Of course, we had challenges a little bit with the profit, but we came back. So all the time winning new customer organically and then expanding the company and the group into different BAs. And then the last years here, we have been also buying companies at a little bit of a higher price. So we bought good companies, one in Hungary, we bought Jardins in Sweden, we did the Troft acquisition this year, etc. And the plan here is to continue, and the target is of course 8%. That is what everybody in AQ is fighting for. And in Q1, Q2 for the first half of the year, we are now 7. So we are moving in the right direction, even though we have a little bit more to go. And this is where we are. I told about most of this before. When I talk to investors, everyone is wondering how cyclical are you? Will you go down now when the downturn comes or not? And AQ, first of all, we are very broad companies. We're selling to many different segments. We also have the small market share, so we can compensate from winning new business. We do have cyclical exposure. We have, construction equipment and others that will go up and down because it's capex. But we are also very much exposed to the non-cyclical. We have infrastructure, rail and buses is a big part of AQ, electrical, transmission systems, also infrastructure. And then we have food and beverage and medical. So we really have a broad portfolio of segments we supply to. And we have the small market share, and we are also very broad in the exposure. We have a little bit to cars and trucks, but that's a relatively small part. For vehicles, we are more into all other types of vehicles that goes with a lower volume and a higher complexity. As an example, garbage trucks in UK is one AQ product that we do. And this is a list of the customers. You can just let this be for a while and you can look at it and see where you are. There are many, many exciting customers to work with here, and many of these customers are very, very demanding and really make sure we are on our toes to be a reliable supplier and develop over time. And we talked about this, that you need to be a very good partner to the R&D department of the customer. The supply manager wants to have the competitive price and the competitive cost. But if you can help the customer to develop very, very good solutions for the future, then you have a better chance to win the business and keep the business and also make good profit, both in our company, but also to make sure our customers are competitive and have a very good solution. And when the quality systems here, most companies have these basic quality systems, but AQ, we're also certified for the railway industry, for the airplanes. We make part for engines to the aircrafts. We have welding certificates, we have automotive standards, etc. So we have a lot of quality systems and standards that make sure we are qualified to serve the customer. And then finally, half of the cost roughly in a company is always the purchasing, the thing you buy. So our competitiveness comes a lot from the way we do the purchasing and the way we do the supply management and how we buy parts, because in most cases we take all that stuff through our books. And we have a fantastic network of supply managers and purchasing people around AQ in Bulgaria, in Poland, in China, in India. So we really try to maximize the benefit from all these people we have around in AQ world that really knows how to buy things cheap. As an example, last week I was going with our guy in Bulgaria who has been buying transport in Bulgaria for 10 years. That guy in Bulgaria is better to buy transport than any Swedish buyer. That's an example. So that's the way we work with purchasing to really make sure we have the competitive cost. So with that, I think my time is out, basically. Maybe I tried to speak a little bit too much about a little bit too many things, but I hope anyhow you got a good feel for the company. I tend to be a little bit excited when I stand here in front of lots of people talking about something I love. And I can guarantee you, AQ, we want to continue growing. We will grow organically. We will grow from acquisitions. We will fight very hard to reach the 8% and stay there. And we want to be with them for long term and provide a total quality and service. And we don't have anything to hide between. We cannot hide between, the IP or the product. or the technology. We need to be very, very good in delivering at competitive cost all the time and really be on the toes to serve the customers when we have problem. So that's AQ. Thank you for listening.
All right, thank you. Thank you so much. We also have time for a couple of questions. One thing that I would like to ask is a bit about, well, how you think about acquisitions. You're talking about this entrepreneurial spirit within the group, but also how important sourcing is and so forth. So when you acquire a company, how do you keep them, independent in a sense and entrepreneurial, but also reaching synergies, and how that work is conducted?
No, I mean, it depends a little bit on what kind of company you acquire. But of course, there's always a good synergy on the purchasing. And then there's also a very good synergy from the selling side of things. You can help each other from cross-selling. You can find new customers, and you can really, finding new business and to work more together with sourcing. As an example, we did a good acquisition in wiring harnesses that doubled the volume back in 2012. And then immediately we could start to work with purchasing to reduce the cost with the suppliers.
Yeah, okay. But the managing day-to-day is done with the subsidiary?
Yes, but we always, stimulate the companies to exchange ideas and to develop the network. And we can take market share from taking the business from the competitors, but we can also, do the cross-selling, because we have strong relation with wiring. We have strong relation with many vehicle customers, as an example. And that one we can use in the sheet metal business, because most of our customers, they buy stuff from most of our divisions, one way or another. And of course, sometimes we are more successful than others, but it's really a good cross-selling. So there are many good synergies on the customer and order side of things as well.
Understood. And in terms of organic growth, this business model is very good to grow with the client, with the customer, as you mentioned. But in terms of getting new customers, and if you think about organic growth going forward, where will the organic growth come from? Will it be predominantly done by existing customers or from new customers?
You have to do both. You both have to be part of your customers' next generation of products, and you need to win and acquire new customers, and you need to do more of the customer portfolio. But the thing is, in our world, when you work with the R&D department and with the purchasing people, you have to be very, very long term. We have a very good showcase customer. We cannot talk about it right now, but we won it recently, and that customer we have been penetrating and working with for 7 years. And then the opening comes, when there is another supplier not performing, or there's a new product and there's an opportunity, and then you have to really, when that opportunity comes after a long time of penetration and sales work, then you really have to be on your toes and grasp that business when it comes. But you need to have a continuous pipeline of customers and projects and opportunities all the time.
Understood. So I think we have time for just one more question quickly. So in terms of, is the pricing pressure in this industry, is there a lot of pricing pressure? How do you work with that? And I was thinking, actually, going back to what you said with automation, for example, and how does that apply to you? Do you have automated process today, or is it more manual? Could you comment a bit on that, how your process works?
We talked about the competitiveness coming from purchasing. You also need to work with the competitiveness from productivity in your factories. And now AQ, we are very big in labor-intensive stuff in Eastern Europe. So we have lots of manual processes. And then we have the more machine-intensive. So we always, try to invest in new equipment. And now we have this big, but we really try to invest, in the machinery that really provides an edge. So when there is technical development in the machine industry, we have to follow. So we look a lot into that. But productivity is not only about automation. Automation is one important piece of the puzzle, but you also need the leadership. You need the good people. You need the competence. You need the full package, because a good machine in itself will not provide productivity from the start. You also have to, deliver the productivity from the good people and the good leadership to make it happen.
Understood. Well, thank you very much for coming and presenting. Thank you. Okay. All right. Time for the next presenters. We have Hans Ståhl and Anders Forsén from NCAB with us. And I'll just leave the word to you. Go ahead.
Great to be here and see so many investors. And I've got a kind of a line. I'm not supposed to step over here. So normally I like to go over here, but I'm going to stand here this time. Anyway, so I'm going to present NCAB. We are producing printed circuit boards, basically used for all electronics. And it's Anders and me going to do this presentation. And Anders is CFO. Who we are and what we do. So we are 17 companies around the world, and we sell to 45 markets. And we have 398 specialists doing this. And we're using 22 factories in China, so we don't own any factories. They're just partners to us. And we like printed circuit boards. We're supplying them to demanding customers. So we are rather picky when it comes to customers. We will like to have the customer should be demanding, put a lot of demand on us. So what's a printed circuit board? You can actually see here at the far left, you have a bare board, and that's what we are doing. And then the boards being assembled, they put in the components onto the boards, becomes a printed circuit board assembly, or in Swedish is kretskort. And we are making mönsterkort in Swedish. And then it becomes a product like this. And we don't produce circuit boards for everybody. We are focused on high mix, low volume, meaning that we're supplying only to industrial applications in a rather low volume. And we do like a lot of part numbers. We do like a lot of high-tech PCBs. And this is an interesting curve, and you can see at the end product here, the price of the circuit board equals about 0.5 to 2% of the total cost of the finished product. But when something goes wrong, it's about 50% of the cases when you need to make a recall from the market is due to the printed circuit board assembly. And you have probably seen that when you have been have some electronic gadget and you slam it into the table or you kick it with your foot and it starts to work. That's typical printed circuit boards problem. So quality is so essential when producing circuit boards. So why does a company like NCAB exist? If we go back to the year 2000, or a little bit previous to that, we had about 30 factories here in Sweden producing circuit boards. Today we have 2 small ones. So basically everything had shifted to Asia and then predominantly China. And then customers, they are still here in Europe and the US, they need the circuit boards. And then it's rather difficult to buy directly from China, so that's why they have to use companies like NCAB. So that's why we exist. So we are buying the circuit boards from factories, delivering to customers in USA and in Europe. And you can see we do add a lot of value to the customer. And one of the most important values is technical engineering support. So even if a customer designs the boards, they need the support to design it so it could be manufactured the correct way. For example, also we have unlimited capacity. See if this works. No. So it doesn't matter how much orders we get. We still have capacity because the factories we work with, they are so big. So they all have capacity. Sustainability, we have 100% control on what's happening basically in the factories. We know exactly how much salary all the workers have, also how the dormitories look like, extremely important. So our journey then, the company was founded back in 1993 in Sweden by 3 gentlemen. that kind of have been producing circuit boards. They've owned their own circuit board shop. And they saw the agony in producing by themselves, came up with a brilliant idea. We own the customers, but we outsource the actual production. They're rather quick, realized that Sweden is too small, so they start to export to Denmark, Russia, Norway, Finland. And then we got new owners 2007, and we kind of pushed even harder with the export. And we started with Germany, Poland, France. And then we acquired 2 companies in the US back in 2012. And we have been growing every year since that, except 2009. That was a little bit of a slump year for us, but still we made a good profit, even that we have a downturn in revenue. We are the biggest PCB supplier with outsourced production in the world. We have one competitor, Finland, a German company, doing about the same thing as we are doing. And then we have a long tail of smaller companies here. We are very much focused on industrial sector, some transport, telecom, medical, but industrial is the biggest part of our revenue. Sustainable business. We have as a target to live for like 100 years more. Because today companies may die also from not being ethical in the way they work. Not only losing money, but they are not ethical. So we focus a lot on this. So we have 3 strategies: supply chain. We are auditing all the factories when it comes to this sustainability and environmental issues. We are also very careful about our co-workers, all the employees, as our only asset is basically employees. And also customers is important. It's important that we teach customers how to design in a sustainable way. Because that is very important. Also how to ship the goods to avoid maybe air shipment. For example, this is from an audit we made in a factory in China. This is what sort of details we are checking in the factories. So we know that all this health equipment works 100%. And this is how engaged employees we have. And this is awesome. This is really outstanding according to the company that made this employee survey. And this is the key for our success, to have engaged employees. And we don't have any bored employees, and that's fantastic. Out of 400 people, no one is bored at NCAB.
Okay, sorry. So some financials then. This is from the second quarter result. I mean, we had a strong year last year with a growth of over 15%, and we continue this second quarter as well. Show the growth of 14%. We also measure growth in US dollar because our business is very much US dollar focused. So we buy everything in US dollar, and we also invoice most of our customers in US dollar. So therefore we try to see that as kind of more of an organic growth. We had 4% second quarter. And we continue to improve the profit. We reached 37 million last year, this quarter, improvement of 17%, sorry. We're working with 4 segments. We said Nordic, which is Sweden, Norway, Denmark, Finland, Estonia. There we had a very good growth this year. It's also connected to an acquisition we made in Denmark in March. So exclude that one, it's about 11% growth. We also have a rather healthy margin in Nordic. The focus in Nordic is not so much to grow and take on new customers, so therefore we have a very lean and efficient organization. Europe and East, we are also growing. There we focus much more on growth. We have much lower market penetration, which means that we also add on a lot of more employees, which cost money initially to have an organic growth. North America show a negative growth, and that was very much due to the tariffs that was increased in May. We had a very strong April, but we could see directly after 10th of May, when they increased the tariff to 25%, that the orders and the revenue fell. We can see it slightly going back up again now, but of course, it's a lot of turmoil in U.S. market right now. East is the operation we have in China and in Russia. Also strong growth, and we have had a strong growth for a number of years. And especially fun is to see the China business, that we are selling to a lot of local Chinese EMS companies. And that's due to we can provide them with good service and good quality, which they can't do by themselves from the factories. As we said, we made an acquisition in Denmark in March. It was a smaller company in the range of 5 million euro in revenue, and there are a lot of these kind of companies in the market, and we believe there will be a consolidation for us in the future. And that was a good add-on to our existing business in Denmark. And together we are now the market leader in Denmark. It was profitable and gave us directly profit earnings per share. Also, we had same culture and so on. And we can see that we could benefit from our purchasing power with better prices and so on, so we could improve the margin for the customers in the existing multi-print business, and also from a working capital point of view, where we had much better payment terms, etc., which we could apply on the customers directly or factories directly. We have been growing top line, and we're also adding on our gross margin. So of course, we're working to give a lot of value add to the customers, so we can add a margin, and it has been stable growth. And you can see it's rather stable despite the currency fluctuations, since we are working with US dollar both as a purchase and sales currency. So then take then the second quarter. We grew from 415 to 473 million. We had growth of 14%, as we said, in US dollar 4%. No. And also improved the result. So we went up to about 7.9% EBITDA margin for the second quarter. And then going back to the segments, we can see in the Nordic, where we do have a good profitability, it went down a little bit second quarter, partly due to the acquisition in Denmark, because they had an EBITDA margin in range of NCAB group, but lower than the Nordic EBITDA margin. Going to Europe, where we expect to grow actually more than we have done. The last couple of years, we have had a stronger growth, and we focus a lot of growing activities. We add on more people, and we also have a new company in Benelux since 1st of July. We opened up in Italy 2 years ago, which still are in a growing phase and making losses in the beginning. So I think here the margin could be much higher if we stop recruiting, but we would like to continue that to have a secure and organic growth. North America, as I said before, when the tariff was increased, we had a direct hit on the revenue. And of course, the market is still very, very insecure in USA. We are still able to improve the profit a little bit. And East, which is our operation in China and in Russia. Here we see stable growth. We have had a good opportunity in Russia. We are growing year by year. And as we said before, we see a fantastic growth in the Chinese market. Originally, we started up in China. We thought that we should sell to European American customers, but we see much more now that we are selling to local Chinese EMS companies. And I think we can do that we have access to the good factories, and we can provide them with much, much better service than they get from the factories by themselves. So that's an important market for us. Some KPIs. We do have a very strong balance sheet. As Hans said, the only asset we have is the employees, so we don't have any investments. We have a very lean inventory. So the thing we have is some goodwill and some trade receivables. So I mean, working capital is less than 10% of the yearly revenue. So that means that we can grow very much without using any cash. We have a high cash conversion. We also have a very low debt at the moment, so we have a lot of headroom to borrow more money to do further acquisitions. Ska du sluta av eller?
So, a summary. The summary of Q2. It's a good quarter for NCAB despite the raised tariffs. But we have seen there is a kind of a slowdown on the top line growth. And we think it's due to this sort of trade war discussions and hesitance. So it's a hesitant among some customers. Also, this Brexit could add something to the hesitance. Gross margin will increase. And we also have a strong profitability during Q2 quarter. Future. So we have 4 strategies going forward. And the first one is, of course, to increase the market share in Europe, USA, and East, as our market share is extremely low. The value of the circuit board business is $60 billion every year. And maybe a third of this is a high mix, low volume. It's the niche where we act in. So that means we have a market share of 1%. So there is so much more to do where we are, where we have NCAB companies. And of course, to work with the existing customers to be able to offer even more, to offer more technical support, more other logistic solutions, of course. And also expand geographically. Malaysia, Netherlands is the proof of that we have done that so. Consolidate the market is also important for us because you saw there is a long tail of smaller companies like us. So we believe that we have an opportunity in making acquisitions going forward. So it's a rather easy plan for us to go forward. Financial targets, 8% growth. Also EBITA, also 8%. And net debt is 2 times. And dividend expected to correspond to at least 50% of the net profit. Any questions? No, I'm not allowed to ask that, or?
I have some questions. All right, thank you. Well, great. I just have time for a couple of questions. I would like to ask one question regarding the tariffs and the trade war and so forth. Obviously, short term, that's quite a significant headwind, but I'm thinking sort of long term, do you see any negative implications of that? I mean, would you potentially maybe lose customers to someone locally? Or I don't know. How do you see that long term playing out?
Because it's going to be impossible for the Americans to source all the circuit board for American producers. That capacity does not exist. And capacity in China, they are building new factories basically every month. Is a new factory or addition being built in China with a brand new equipment and high quality equipment. So they will still be the world producer of circuit boards. So I think when the turmoil has everybody has come over this 25%, I think they will start to buy again, despite this higher cost. And we have sourced a Taiwanese factory, which is not a part of the 25%. And then they have about the same prices actually as the Chinese factories, including 25%. So,
yeah, understood. And also one other thing. So the customers, like how sticky are the relationships there? You mentioned it's a very fragmented market and so forth. Is it easy to take customers from other competitors, or how does that work? How do you work on that?
From a customer point of view, they normally nominate a supplier for a project. And as a circuit board, it's kind of a sensitive product. You don't change factory the first thing you do. So normally you have a product, you run that product with a supplier. If it works, good.
So, I mean, we're working on a long-term basis, and of course, so it's very rare that we steal a project. We get nominated for a new project, and that's the way we want to work also.
So could you just define sort of, you're saying you work in long term on this, is that years, is that, half a year? How long are these projects usually? Maybe it depends, but in general.
It depends, but they're quite long, especially in the industrial sector. If you deliver to ABB, the boards last for like 30 years. But in other applications, maybe it's 2 years. And then they make a change of the products, so it's much shorter cycles. But it can take 10, 15 years to get a new account, a new customer.
Okay, understood. And in terms of the consolidation phase of this industry, I mean, you're the leader, but there are a few other guys who are also substantial size, let's say. Do you frequently see yourself competing with them, for example, with the recent acquisition, let's say, or?
Yes.
Yeah. And what sort of, I don't know if you've communicated that before, but what sort of multiples are you paying for these companies?
We have been working with about something between 5 and 7 times EBITDA.
All right. Yeah. Okay.
And I mean, they are typically family-owned, small and mid-sized companies. So of course, there are not a lot of bidding activities in that way. So.
Yeah. Okay. Understood. And one thing that I saw as well, part of your strategy is to ensure further profitability of existing customers. And you gave a few examples, but could you just tell us a bit more in detail, like how you actually approach that and how you work with, getting more out of the customer, basically.
Mm-hmm. Because when you start to work with a customer or a project, we do a lot of investments in the beginning. And we're still charging the same price for the circuit board. So for us, it's a big investment. It could take 2 years before we have any return of the money of that project. So it's more like that. We have kind of with some customers, we have worked our way through all this sort of agony in the beginning of a project, and that's when the kind of profitability comes, when we have done the projects, when they're kind of ready, and we have been delivering board for like 2 or 3 years. So that's the philosophy behind this.
Okay, understood. And just in terms of consolidation again, are there certain geographic areas that are more interesting than others? Is there a void in certain areas where you see this is an opportunity, or is the fragmentation sort of similar across the globe, let's say?
I think our main focus is to have growth in Europe and still USA. Even if USA right now is a bit turmoil, but we believe this is a big market for us. The American market for PCB is as big in US as in Europe. And for the future, we would like to be in the same size in USA as well. So US and Europe is where we're focusing our acquisition targets or growth in.
All right, understood. That was all for me. I think that's all we have time for. So thank you very much for coming.
Thank you.
Thank you.
Okay, we're starting to reach the end of the first day of Introduce Days. But before that, we have the pleasure of welcoming Christian Sundin, CEO of FORMPIPE. Me, myself, I am Simon Granat. I work as an equity analyst at ABG, for those who don't know me. With that said, I'll leave the word over to you, Christian, and please go ahead.
Okay, thank you. Yes, as Simon said, my name is Christian Sundin. I'm the CEO of FORMPIPE Software. FORMPIPE Software is a quite naturally a software company listed on small cap in Stockholm. The agenda I have planned to cover for today is first just a FORMPIPE at a glance. For those who has not heard about us before, I will make a short introduction of what we do and what sort of things we help our customers with, but also some financial overview of FORMPIPE. And then go in a little bit on our offering and the market we are addressing. And then the most interesting phase of today is the transformation to SaaS, software as a service. You will hear me mentioning recurring revenue and SaaS quite a number of times today, and that's sort of the most important thing to take out of the session today. And then a short glimpse on entering the next phase of FORMPIPE history. What we've done recently is reorganization in order to utilize our resources in a more efficient way, and also make sure that we really are using the momentum we have in the SaaS transformation and the partnership we have with Microsoft. So those are the 4 areas I'm intending to cover during today's session. Starting, going back a little bit then, who is FORMPIPE and what do we do? Yeah, we are a software company within enterprise content management, ECM. Nowadays also called content services. If you talk with people like Gartner, they have renamed it, mostly due to the fact that software as a service, and then you talk in not as much products as services. So that's the same thing if you stumble over the content services thing, that's also us. In a very simple way to describe enterprise content management is that we provide structure and efficiency in digital information, making the most value out of all the digital information businesses and organizations have in their daily work, and which truly is an asset. And even simply described, we are like the ERP systems, but for words instead of numbers. So making sure that you have the words in the right place and you can find it, and that it's the right information you read and not something old or something that doesn't add up. We're present in the markets of public sector in Sweden and Denmark, which is also where we have our heritage. A lot of it comes from the diary of public registers of Sweden. So starting from that, the core, where regulation has been the driver for governments and municipalities to make sure that digital information is stored in the correct way. So that's where we have our heritage, and then we've grown from there. We also have a quite substantial part of our business in the private sector nowadays, mainly through partner network all around the world, and that's what I'm coming back to on the Microsoft partnership and the partners we have supporting that part of our business. We are approximately 230 employees today in Denmark, in Sweden, in UK, US, Germany, and in the Netherlands. We have most of our product development offshore through a partner in Ukraine. We have all the product management in the Nordics or in UK, but we have a very efficient production setup where a lot of the coding is done, and we can scale up and scale down on the development resources in Ukraine. However, we have very rigid control over it in the process, and we consider ourselves being very efficient in getting new modules or software out on the market with short time to market on that with the setup we're having. We're quite a small company. In 2018, we had a turnover just about 400 million Swedish, but 233 million out of those 400 million are in recurring revenue, and that's our pride. That's the part of the business we want to grow. We actually want to reduce the 406 if we can and get an even higher number on the recurring revenue. So please consider us as a 223 million company, not a 406 million company. The recurring revenue grants for the stability we have in our business, that more than 50%, as you can see, of our business is recurring revenue, money in advance, coming back year after year, and we have a very low churn in our business. When our customer has bought our products, they stay more or less forever. They rather increase their investment in our products because they see the benefits of it, and then they buy more. We had an EBITDA margin of about 25%, and today the market cap is 1.2 billion in Swedish. I will nag about the recurring revenue, and as you see, the recurring revenue is growing, and it grew by 14% last year as well, and we continue to grow the recurring revenue, which is the main compelling one for actually believing in FORMPIPE, brings stability. Going back to what we do for our customers and enterprise content management, it's not rocket science. It is a matter of storing your digital information in a way where you can actually find it and be sure that you act and read the right and the latest version of every document or decision you have made, and that you have traceability in all changes on those documents. So even if a case of 100 different documents has been altered with 20 new documents, and those documents has been changed 1,000 times each, you can always go back and see who made what change to this document or this case, at what point and with what reason, and you have complete traceability and auditability of whatever decision you have made or documented. Meaning that no one in an organization that has a structured way of handling their business important documents will act on the incorrect information or an old version of a document or instruction. Neither will you spend a lot of time searching for a document in a lot of folders where is this the latest version or is that the latest version? And everyone that has worked with Windows Explorer and tried to make a folder structure, they realize they make great looking folder structure. Oh, here's the April bank things and this and that. And then the folder tree just expands. And after a while, you realize this folder tree is just impossible to use. Let's make a new folder, old. And then you drag it all into that. And then you actually destroy a lot of digital value in your organization. That is structured capital that will no longer be used, and you will start over again, and you will not use those old documents. That is not a way to be sustainable in the future. That is not a way for businesses to be competitive in the future if you treat your digital information that way. Digital information is way too valuable to be handled in that way. That's the reason for having a structured way of handling your digital information in both governments and in corporations. And that is what this is all trying to describe. Data comes in, it's whatever format, we transform it to whatever format the source want to have. You have records management, which is traceability. You have document management, which is actual logic in documents. You have a naming standard. You have collaboration, you can send documents around. You have workflow, you can approve documents. You make sure that the document is in the right version, right approver has approved it. And you have web content management, it's actually publishing the documents to internet or intranet or wherever platform you want to publish it on. And you can distribute it in whatever format, also in paper if you like to, out of the system. And then you have preservation or long-term archiving, which makes sure that you can read your documents 50 years from now when neither FORMPIPE, Microsoft, Oracle, Adobe, or no one else that we know today is no longer around. But you can still bring up your document, you can read it, and you can put it in its original context. Not only read the document, but you know which other document it belongs to and which other decision it belongs to. That is preservation for real, and that will never be possible if you store your documents in just a folder structure somewhere on, even if you do it in the cloud. So this is the value we provide to our customers. The market is stable but growing. Gartner and such likes forecast a global 11% growth annually. Sweden and Denmark, which is our front runners in this, we have a lower growth because we've come further, especially in the governmental side. So 7-8% is the forecast in growth on ECM on that. And the structural drivers has so far, to a very large extent, and that's why public sector are the front runners, been regulations. But you all heard about GDPR, for example, that has made a huge push on these things also for corporations, making sure that if you have a lot of unstructured data on a file share, yeah, you are in a violation of GDPR for sure. If you have a structured way of handling, you will be on top of that and make sure that you're not violating GDPR. FORMPIPE's offerings, yeah, we have sort of 4 areas of products. We have the case and document management. That's very much what I described on the previous picture. We have the structured data archiving, was what the preservation I mentioned. We have grants management, which is sort of a way of using case and document management, but for collecting grants. For example, we help the farmers of Denmark to get their EU grants on time and automated. And Denmark is actually the only country in EU that pays out the grants on time, and that actually has an effect on the GDP on the country of Denmark because it's so massive amount of money. But you also see that it's very pink, so it's very consultancy intense. So it's not really our preference to have that as much consultancy as we have there. We are trying to push that to partners instead. So that will be a decreasing part of our business. Then we have customer communication management. I will come back to that. That's input-output management, and that's where we have the biggest drive on the SaaS transformation with the Microsoft partner network that we, and especially in the cloud. So, and very interesting case with that. Having said that, now you must wake up if you have not listened too carefully to me for a while, because this is the big thing, the SaaS transformation. We've sold our products as SaaS for more than a decade. We had, I think, back in 2006, we had 8 million yearly turnover on software as a service. But the market has not really been ready for buying software as a service. We've offered it, but no one has really bought it. Something really funny happened in 2017. That was Microsoft launched their ERP platform in the cloud, the Dynamics platform. And all of a sudden, all customers want to buy this, our software and other things in the cloud. And it seems like the entire market has realized that the cloud strategy for for being able to reach and work with my documents, my digital information, is the future, and we need to address it. So this is the ARR for our recurring revenue on SaaS alone. And as you can see, the growth is quite impressive. So going into 2016, we had a run rate that has been stable from 10 million yearly on SaaS revenue. When we went out to 2018, only 2 years later, we have 40 million in annual run rate on SaaS. So of course, this is a paradigm shift in the market and how customers buy software. They buy software as a service. And this is all in line with our strategy. We've prepared for it for a long time. We've really pushed these sort of way of charging for our customers, regardless if it's in the cloud or if it's just renting a software. But now the market they really want it and want it for real. They want it up in the cloud. For all, it's decreased risk in our business to get a greater part of our revenue as recurring. But of course, in the short term, that makes us not getting the upfront fees for traditional license. So that is pushing our margins downwards. So it's a short-term negative effect on sales, margin, and cash flow. And this is rolling 12 months of traditional license compared to SaaS. As you see, rolling 12 months here, we've been up to like 75 million back in 3 years ago on traditional license. That, to a large extent, goes right down to EBIT for us, because it's just a software license we sell, and we then get paid for that software license. Since people now buying it SaaS, we don't get that upfront fee at all. So we're now trending down to below 40 million on traditional software license. That means that the 35 million in between there, that goes directly to our margins and pushing our margins downwards. Despite that, we have, during this phase, been able to improve our margins. So we've, in parallel with this pressure this puts on our margin, we have still been able to increase our margin. I mentioned earlier that we had 25% in EBITDA 2018, and here you now see 16%. And that's not me messing up with the numbers. It is the EBITDA adjusted you see here, because we think that's a more relevant number. That's the cash flow. So we're actually putting back everything that has been activated for product for R&D. The accounting way that you put the cost of R&D you put to the balance sheet and you depreciate. Here I've pretended that we are not allowed to do that, and I've taken it all as cost. So here all R&D are in as cost. And that's where we go to these lower. So EBITDA adjusted is not EBITDA, it's EBITDA less activated own work for R&D. But we still improved it quite significantly over the last couple of years, despite the push on the margin that SaaS gives us. And despite the fact that we are strategically lowering our consultancy revenue because we want to push quite, even if it's profitable, we do not want to have more consultancy that we absolutely must have in order to support our partners and make sure that we do not lose out on software deals due to lack of bandwidth. But apart from that, we prefer our partners to do all installations of our software in the market. So from that perspective, and that's why I want to repeat it again, look at us as a 223 million company rather than a 406 million company. It's only the recurring revenue that we want to grow. The other parts of our revenue, we actually want to take out and thereby match that with less cost, meaning a more risk-free company and a more stable company. And that's, of course, the whole idea of this. And the curve here indicates how much of our fixed costs, and what I mean with fixed costs, that's salaries that you cannot swiftly get rid of. We cover with our recurring revenue, and we've now gone to that we're up to 80 to 83% of our total cost for property, salaries, and all the operational costs. That is not direct linked to, for example, a sale or a sales commission, because that's, of course, only if the sales occurs. So we're quite a risk-avert business, having covered more or less almost 85% of our cost already before the year starts. That's a good start of the year. And then we need some additional sales on top of that to be profitable, of course. Last thing I was going to touch was the next steps of FORMPIPE. Yeah, we have seen the thing I mentioned about SaaS and the Microsoft gaining market share in the ERP sector with Dynamics. They also have CRM in the Dynamics, so Dynamic portfolio in its full is gaining market share. And we have a strong partnership with Microsoft, and we support their journey, and we have products that support making their offering in the cloud even better. Lasernet is one of those products, long-term archive is another, quality control is the third, that we see good sales potential on just plugging on top of the Microsoft journey. We've had, up to 2018, different private sector business units in FORMPIPE. What we decided to do was to see, can we utilize these resources better? Yes, we can. We thereby made a business area out of them, and we have refocused all resources within those business units in order to support the journey with Microsoft, with Lasernet in Azure. That's the name and stand of Microsoft Cloud. Making it possible to refocus our best resources to do their job on markets where we see good winning potential for our business, rather than fighting in areas where we have longer terms of converting deals and less good market position. And also adding on other offers as long-term archive and quality control, as I mentioned. Quality control, very useful, for example, scanning data in a company, whether or not they're violating GDPR, then quality control is very, very valuable. So that's the next step, and as you can hear, I believe a lot in the private sector initiative we have ongoing, while the other two business areas are solid and also growing and helping the digital society to improve with better solutions for citizens. So also very successfully. That's about what I had for now. Thank you.
Perfect. Thank you, Christian. I'll get right on to the questions. And if we start off by giving a broader perspective on the current market, especially in Sweden, the first half year of 2019 has been somewhat sluggish, mainly as a reflection of the delayed establishment of a Swedish government. Have you seen any sort of trends in the other direction now going into the second half of 2019, or what's your thinking around that?
Yeah, speaking about the election, I mean, I have always been, and I think I've told you, been of the impression that election should not impact our sales that much. I thought it was always a bad alibi for our salespeople not to sell. Now I've actually gone back and looked on data because I became quite worried with the trend in public sector during the last 3 quarters. And found that, yeah, the activity is way lower the following quarters in terms of published tenders after an election. So that was the last election, the election prior to that, and the election prior to that. The quarters not up to the election, but after the election are impacted negatively in terms of new tenders coming out in the market. And yes, we see now from early summer, and now there's higher activity in more published tenders again from the public sector right now. So we have good hopes that the business volumes will come back.
Thank you. And around the current cost base that you currently have, both in terms of current personnel and how much you're investing in R&D, etc., are you satisfied with those numbers, or do you feel like you need to enhance your R&D expenditures, etc.?
Well, to maintain the journey we can see in the numbers, I don't think we really need to increase cost. However, we are looking always to see, okay, we are on, as I tried to touch, we think we have reached a platform, 2018, where we can see that we have successfully improved our margins. Now we see that we are getting to decent software margins on EBITDA and especially on EBITDA adjusted, and say, okay, how can we grow faster when the recurring revenue brings us to even higher margin? Than how high should we go in order not to jeopardize the future, and rather grow faster and sell more things on okay margins? So that might lead to that we find new initiatives, new things that we want to sell to our current customer base, and thereby spend a little bit more on R&D. I'm not sure I have it right now, but that might be a case, but then it will always be supported by more sales. We will still have a tight cost control and make sure that we have decent or good margins. So, and on the other thing with that, we are still trying to push down our consultancy, meaning that means that we can reuse resources from that we can grow without hiring a lot. Having said that, it's hard to hire, and I think we continuously have 5 or 10 recruitments ongoing. That's just normal life for us. So.
And speaking about the consultancy business, it has been decreasing both in absolute numbers and as a percentage of revenues. Yeah. Where can we see FORMPIPE in a couple of years? Will it be 0 revenues, or what's your ambition?
Well, yeah, I would prefer 100% recurring revenue. We will not get to that. We will always need resources that, even if we have the end customer implementation done by partners need technical support on a level that only the product company can give, and we need to support them with that. And the journey we see in front of us in the private sector, where we also will open up more geographies, most likely, or at least open up more partnerships in geographies, will require more support on technical terms, in terms that we will be able to charge for, meaning that we will get some consultancy revenue from that as well. But hopefully the growth of recurring revenue, the growth of recurring revenue will go faster, meaning that the level of recurring revenue compared to the total revenue will continue to increase. We will have more than 50% of our revenue will be recurring. The recurring revenue will grow faster than delivery and traditional license.
Yep. And some time ago, you signed an agreement with an insurance and bank organization on your long-term archive product. Was this product especially customized for this customer, and how long are the sales cycles for such an agreement?
Well, this is really interesting because that's the first evidence that the reorganization we did and looking on how we can cross-sell our products in a more efficient way actually worked out well. We sold not only long-term archive, it was actually LaserNet and long-term archive we sold to that client. In a combination, in a bundle where they work together. We never done that before, and now with the new organization, private and public spoke to each other, came up with a proof of concept, and had a joint dialogue with that customer on how these two products would work together and sold that way. So it was the first evidence that what we're trying to create actually is working, and to cross-sell our products. So yeah.
And speaking of the reorganization, etc., into the private sector, has that developed as you had planned, or has it exceeded your expectations the first half of this year?
Well, it's a change journey, and it's a change journey for people, and a lot of people give their heart into one product, and then you tell them to go and put your heart in this product instead. It's the change journey, and not all people would love it. But as far as I can see, this goes way beyond above my expectations, and we really have a good collaboration mode in the company on this, and I see we're doing it very well. Yeah, so yeah, it goes as planned, but it will still take time, and I mean, we will not abandon anything. We'll just make sure that we put our focus on areas where we see better growth potential. That's all. So yeah.
Looks bright for the future. That was all questions from my half about.
Okay.
And I think this ends the final session for today, and we'll pick up it again tomorrow morning at 9 o'clock. And thank you everyone for participating today, and especially thank you to Christian.
Thank you.